We do want to welcome everyone to Holston Annual Conference's Council on Finance and Administration's presentation of COVID-19 stimulus and churches. What do we need to know and what do we need to do? If you haven't already, click on the Handouts tab in the upper right-hand corner. And when you click there, you will notice several handouts that you will want to download. I do not recommend that you print all of them, but I do recommend that you download them all. And they will be fantastic for you in terms of reference, I hope. But you may want to print the one called Slides with Notes. If you are a kind of person that likes to take notes as you go, then that will give you a good opportunity to do that. And so click on the Handouts tab, download those handouts, and that will get you good and ready to go. Also want to let you know that if you have any questions along the way, the best way to do that is to enter those into the Q&A tab. So the chat tab here is great if you just want to chat with each other, but I may not notice the chat because when I'm teaching, I am not actually looking at it. So just be aware of that, but I will go back and look at the Q&A and make sure that we answer any and all questions, at least that are appropriate for the group, as we can at the end. So if you have questions along the way, enter those into the Q&A. I do recommend that you wait to put your questions in until after we have covered that particular topic, because that way we avoid asking questions that we know I'm going to cover later. So if I cover it and then you have questions, enter them in. If we get to the end and I didn't cover it and you think I should, then go ahead and enter those questions in. But don't enter them before I have covered it. That just helps me to not have a gazillion questions there to answer. See quite a few people here that I haven't seen in a while. So good to see y'all. One of the things that is interesting about this virus is we don't see each other quite as much, at least not in person, as we have been used to doing for the last little bit. So we're going to go ahead and get started. And as others gather in, that will be just fine. But we're going to go ahead and get started. We are recording this, by the way. And if you are attending today, then later tonight, you will actually get a copy of the recording. So you'll get an email from me that gives you a link to the recording. I do want to let you know that link is specific to you, so please don't share it beyond that. But if you have someone who you think would benefit from this material, we're actually doing it again on Monday evening at 6 o'clock Eastern. So Monday evening at 6 o'clock, and they can come and register. And then after that time, Tim Jones in the communications department will also have a recording that can be shared broadly at that point. So that's kind of what we're doing. This is copyrighted material. So basically, if you're using it in your churches, you have my full permission to use it. Just don't, steal it and publish it on the internet somewhere or something like that. Who am I? So most of you don't know this side of me. A few of you do. But I am actually something called an enrolled agent, which means that I am federally licensed. So CPAs are licensed at the state level. I'm licensed at the federal level, means that I can practice all across the country. And I am considered one of America's tax experts. I teach people all over the country, and you can see some of my areas of expertise there. I say all of that simply so that you know that this is stuff that I do on a regular basis. Yesterday, I taught about 1,500 tax professionals on some of these same topics, did the same last week. And I currently serve on the Legislative Implementation Working Group for the Department of Treasury at the federal level and the IRS. So I am deeply and intimately involved, sometimes more so than I want to be, in how do we implement new legislation that comes down the pike that relates to the taxation at the federal level. And obviously, we have seen a couple of massive bills over the last couple of weeks. And so what we're going to do today is we're going to look at the Families First Coronavirus Response Act. That's the one that passed a couple of weeks ago. And we're going to look at that briefly because we need to understand about paid sick leave, and we need to understand about an expanded Emergency Family and Medical Leave Act. Because if we mess these things up in our churches, it can be a big problem, and churches are not exempt from these. We also need to understand the CARES Act to some extent. And we're going to look at some individual provisions that are in here, but we're also going to take a look at a brand new form that we actually released this week. In fact, it's only in draft form right now, but it's Form 7200. And we'll talk more about why you need to know that if you are handling payroll in your church, or if you plan to avail yourself of any of the opportunities for getting help with expenses during this period of time. So let me just say that right off the bat. Ultimately, what we're going to be talking about today is how do we get your church's help for their expenses, primarily payroll, but we're going to talk about some other expenses as well during this period of time. Because our churches, all of our churches, are seeing a situation in which we have decreased revenue directly as a result of the fact that we are not meeting in person. And so we're going to talk about that. We're also going to talk about a notice that came from the IRS that's going to give us some relief. We're going to talk about the recovery rebates for individuals, partially because you care yourself and partially because our parishioners care and we care about our parishioners, and they're probably going to ask you some questions. So I want to make sure you understand basically what's there, some other individual provisions that can help us, and then we're going to really dive into some of the provisions of the CARES Act. Now, this is a large law. We're not going to deal with the whole thing. We're going to deal with only the parts that I think impact us at a church level. So we're going to talk about the employee retention credit. We're going to talk about the payroll protection program, and we're going to talk about the emergency disaster loan as well as the emergency grant. In all of this, we're looking at strategies for how do we cover our expenses. I'm going to go ahead and launch a polling question. And some of you have maybe never seen one of these polls, but it is popped up on your screen now. And it simply asks a question, what brought you here today? And this just helps me to know kind of who we have with us. And so the answers are, I'm a part of Holston, I'm a part of another United Methodist annual conference, I'm a part of another denomination, or none of the above apply to me. Just helps me to get a feel for who is here today and helps me to sort of tailor the rest of the response. So appreciate y'all answering that. And we'll get started once again in just a moment. All right. Looks like we have about 245 of you that have responded. So we have about another 50 people or so that will give just a moment here. But if you can go ahead and answer that quickly, I would appreciate it. It's not a hard question. Just what brought you here today? All right, fantastic. All right, so it looks like, and I'm going to go ahead and close this poll, but it looks like 89% of us are a part of Holston, 4% of us a part of another United Methodist annual conference, 6% a part of a different denomination, and then we have 5 people here today, which represents about 2% of the audience that said none of the above applies to me. So everyone is welcome. We're glad that you're here. This is sponsored by Holston. So we're going to talk about some things that are specific to Holston in terms of polity or the way we do things. But for the most part, 98% of what we talk about will apply to all of you. So you are all welcome, and we welcome you here. Glad that you are with us today. All right, so we're going to go ahead and get started diving into the Families First Coronavirus Response Act. And there are 2 bills contained within this law that we care about. The first is the Emergency Family and Medical Leave Expansion Act, and the second is the Emergency Paid Sick Leave Act. And then there's also a section that talks about how we get tax credits for paying for these things. So we care about that too. But one of the things that I want to point out is that the law requires us to post a poster. Now, this is actually something that churches are not exempted from. And so you are required to post a poster. I have included this in your handouts, so you should all download that poster. And how we post it gets interesting in this time because our buildings largely are closed. So you need to post it wherever you post other posters like this on a bulletin board or in the office or someplace where any of your employees would see it. And yes, this is true. Even if the pastor is the only employee in the church, you still are required to post this. But if you have employees who are now working from home and not in the church office, so they're teleworking, which is true for a lot of our churches right now, then you need to email this poster. Just email the PDF that I gave you that you can download. It's free. Email that out to your entire staff, in addition to posting it in the office. If anyone is going into the building at all, then you need to do both. Now, if your building is completely cut off, no one goes into the building, including the pastor, no worship team, nobody, then you can only email it. But you need to do both for most of our churches. So again, you need to download that poster and you need to print it and put it on your bulletin board or wherever you put these kinds of notices. But you also need to email this if you have any employees that are not currently working inside of your building, that are teleworking. This is a requirement by law, and there are fines for not doing it. So I strongly, strongly, strongly encourage you to download that. It's in the handout section, and make sure that that is posted as we discussed. All right, so let's talk about the Emergency Paid Sick Leave Act. I want to talk about that one first. And paid sick leave is provided to the employee if they're unable to work or telework. So if you have the ability to telework, for example, all of our pastors right now would not qualify because we have the ability to telework unless we're actually directly impacted. We'll talk about that in a minute. But as long as we can still telework, we're still doing our services, we are still recording our videos, we're going on Facebook, we're going on YouTube, we're getting on the phone, we're doing our job still, then we're not going to qualify. But we may have some employees in our churches who are not able to do their job by telework, and they're not able to come into our buildings now. And so this could apply. So you need to be aware of what is happening here. So first of all, if the employee is subject to a federal, state, or local quarantine or isolation order that is related to COVID-19, this is now true in both Virginia and in Tennessee, where the bulk of our Holston churches are. I didn't check Georgia. We have a few in Georgia, and we have a half a church in North Carolina and a church in West Virginia. I didn't check those states, but at least in Virginia and in Tennessee, this is now true where we have these stay-at-home orders, right? And so this could apply to a lot of our folk. The employee has been advised by a healthcare provider to self-quarantine due to concerns related to the coronavirus, or the employee is experiencing symptoms and seeking a medical diagnosis. Each of these cases, paid sick time can be provided, and these are considered conditions 1 through 3. That's significant. We'll talk more about that in a minute. But it's also provided to the employee if they are caring for someone else. So those first 3 things related to themselves. The second set of 3 things are going to relate to other persons in the household. So if they are unable to work or telework due to the fact that they are caring for an individual who is subject to an order like we discussed earlier, where they themselves are sick, so another individual is sick or has been told to quarantine, or they're caring for a son or a daughter of an employee if the school or childcare facility is closed. Now, this is going to be true for all of us, many of us in Virginia and Tennessee, right? If we have children. So we could have employees in this case. Now, pastors are not going to qualify for this because we can telework, and some of our other church employees can telework as well. But if you have persons who are on your staff who are unable to work or telework, and they have a child at home that they are now homeschooling because the schools are closed, then they could qualify under this Paid Sick Leave Act. And you need to be aware of this, and you need to be aware of your obligations under this. If the employee is experiencing any other substantially similar condition to COVID-19, then that too could qualify. So let's look at what we have to do. Well, first of all, you cannot require that the normal paid time off or sick days or other paid leave is taken first. You cannot require that. That is statutory, meaning the law says that. The leave is available regardless of the amount of time that the person has been employed. So you cannot say, well, you haven't been here for a year. You can't say any of that. They can actually be in their very first day and then go on this leave. And so that is significant to be aware of. And applicants are excluded, but it is available from the very first day worked. There's some ambiguity about what if they have been hired but not yet started. I actually think that the intent of the law is to include this category, but we don't have regs that spell that out. But I think you need to assume that it does at this particular point. Now, I'm not going to get into labor law. I'm not an employment attorney, but there are some teeth here. So we need to be very, very careful about just terminating people or laying them off during this period. There's something called the WARN Act or the WARN Law and some other things. And so all I will say is if you are thinking about laying people off, or if you are thinking about terminating someone during this period, you need to consult an attorney before you do so, or you could get yourself and potentially the annual conference in some trouble. So you do not want to do that without consulting an attorney, especially if it could be seen as trying to circumvent our obligations under these laws. Okay. So what about employees that work under a multi-employer bargaining agreement? This would be like a PEO type situation. Some of us have a payroll company where our employees actually work for the payroll company and they provide the health benefits and those sorts of things. And then we send our money to that payroll company. Those are called PEOs, or professional employer organizations. Those are included. We do have a few churches in the conference that utilize one of those. So I wanted to mention that. Still included in that scenario. And the effective date for this law is April 1st. So this is now in effect, has been since Wednesday of this week. So what are we looking at? We are looking at ourselves. Any private entity that employs less than 500 people and employs one or more. So unless your church employs more than 500 people, then you are included in this. Nonprofits are specifically included. So by the way, is the Library of Congress. So how much do we have to pay? Well, if they fall under that paragraph 1, 2, or 3, these are the ones that directly impact the person, then it is up to $511 per day. I say up to because you're going to look at what was their actual salary, and you're not going to pay beyond that. And actually, we're going to look at 2/3 of that. But we're going to look at what was this person actually paid. But it can be up to $511 a day, and this is for 2 weeks or 10 days. So that's $51.10 in the aggregate if they fall into the category 1, 2, or 3. Now, if they're in the category 4, 5, or 6, remember this includes their child is home from school, then this is going to be up to $200 a day, or 200 times 10 is $2,000 in the aggregate. But again, we're going to take 2/3 of the regular pay, although that cannot fall below minimum wage. So if you have someone who's close to the minimum wage, you cannot pay less than the minimum wage, but you're going to take 2/3 of the regular pay up to the $200 a day, or the $511 per day, depending whether they qualify under 1, 2, or 3, or 4, 5, or 6. If you don't remember what those are, don't worry about it. It's in your material, and so you can go back and look at that. All right. The relationship to paid leave under the second law. So the second law is the Emergency Family and Medical Leave Expansion Act. Remember, these two bills are included within this greater Families First Coronavirus Response Act, and they both are now effective. So this one goes into effect and covers a 12-week period, but the first 10 days are not covered by this provision. They're covered by the paid leave provision that we just discussed in most cases. So the first 10 days may be unpaid, or we could use any other type of leave. Hint, hint, think the paid sick leave we just talked about. So how do we calculate this? Well, again, we're going to look at an amount that is not less than 2/3 of an employee's regular rate of pay that cannot exceed, under this bill, $200 per day, or $10,000 in the aggregate per employee. Now, remember, this one is going to get triggered, or I haven't told you yet, I guess, but this one is going to get triggered by the child being home from school and you not being able to work or telework because of that. That's going to trigger this particular bill. So we could have a lot of our people who are triggered by this if they are not able to telework. You need to be aware of this. And these dollar amounts can get scary because we're talking about $10,000 in the aggregate. Don't freak out, because the government is going to help us pay for those. And I'm going to walk you through how we get that money and how we help with that. Same calculations, by the way, for part-time, where we're going to look at a 6-month look back. And also, if they haven't worked for the last 6 months, then we're going to look at a reasonable expectation for what they expected to make or to work in terms of number of hours. So that's the way we're going to deal with our part-timers. If you have more questions specifically about that, feel free to reach out to me and I can help you out with that. I don't want to go into too much time here. But the bottom line is that we are looking at 12 weeks of leave. The first 2 weeks not paid in this provision, but they can be covered by the paid sick leave provision. So we have persons who work in our churches, are employed in our churches, are unable to do their job by telework, but part of that is that they are now in a situation where they have a child at home because the schools have closed, and they have to be the homeschool parent. They could qualify under this Emergency Family and Medical Leave Expansion Act, as well as the paid sick leave. And we have a responsibility to let them know that they could qualify and to provide this benefit. And so we are not exempted as nonprofits or as religious institutions from these provisions. So you need to be fully aware of that. Again, there are labor law issues here, so consult a labor law attorney if you're thinking about letting anyone go or laying them off. I cannot stress enough, you need to consult a labor law attorney first. And just to remind you, we have a responsibility to notify our employees of the availability of these benefits. I provided that poster for you and talked with you about how you need to do that. This particular law, this particular division of the law, is triggered by the employee's inability to work or telework due to a need to care for the son or daughter under 18 years of age because the school or place of care has closed due to the public health emergency. Again, a lot of our schools are closed, all of them in Tennessee, all of them in Virginia, right? And so these are significant things we need to be aware of that our employees could very much be impacted by. What does the term public health emergency mean? It simply means an emergency with respect to COVID-19 that has been declared by federal, state, or local authorities. So that includes all of us because that has been declared at this point. And the school means an elementary school or a secondary school. So we are not talking about higher education here. We're talking about elementary school or secondary school in this case, but childcare facilities could also qualify under that separate part. Remember that the effective date is April 1. And PEOs are included. So just because you have a PO does not mean you can ignore these provisions. You still have a responsibility as the place where the person is working. All right, so let's talk about how we pay for these things because it can get scary when we're talking about $10,000 an employee. That's a lot of money, right? $2,000 plus $10,000, $5,110 plus $10,000. That's a lot of money. So the good news is that the government is going to help us pay for these things. We're going to get payroll credits for the required paid sick leave as well as the required paid family leave. So for both of these, and we can apply these to wages that are paid beginning on April 1. 100% of the qualified wages are paid, plus we also get a pro rata share of the employer's qualified health plan expenses. So if they are on the conference insurance, then you can include the church portion that is being paid for those health plan expenses in addition, and get credit for that so that does not cost the church money either. And some of you are sitting there saying, well, my payroll tax liability is not going to cover all of this expense. We're aware of that. The IRS is aware of that. Congress is aware of that. And so it's going to be refundable if it exceeds that payroll tax liability. What do I mean by refundable? It simply means that if it exceeds that, you're going to get a refund of those amounts, and it's going to get even better when I show you Form 7200 or talk about that in a minute. The good news is these are going to be paid very, very quickly, so you're going to have that liquidity to be able to do this. It also counts for self-employed individuals. So if you have 1099 employees in your church, which we should talk about, by the way, because anyway, we should talk about that, and we will in a little bit. But if you have self-employed individuals, then you do not cover them at the church. They are not your employees, but they can get a credit against self-employment tax for these. It's basically the same calculations, but it's a little more complex. I have put that in your material. I'm not going to go over it here other than to say it is in your material. But obviously, they can't double dip with wages. So be aware of that. Now, 7200. This is a form that's going to let us get advanced payment of these credits so that we don't have to be out that money and then wait on a refund. We can actually get advanced payment for these funds by filing Form 7200, which is really good news. And we can immediately reduce our employment tax deposits as well. So we don't have to pay in the money that we would normally pay in. We're going to get some relief on that. But we can't double dip. So we're going to do what we can here. And all of this is in Notice 2022. It gives us relief from the penalty for failure to deposit the employee taxes, gives us the ability to reduce without a penalty these taxes that we would normally pay in, whether we're on a monthly basis, quarterly, weekly, in the case of some of our larger churches perhaps, then we are going to be able to not pay those in if we know that we're going to have these credits that will stack against it. All right. The bad news is payroll just became more complicated, but the good news is we're getting credits here. So if you have someone within your church that manages your payroll, business administrators or something like that, you need to be really, really nice to them over the next couple of months because their job just became significantly more difficult with some of these credits that we're going to be talking about. We're going to talk about the CARES Act in just a moment, but I'm going to go ahead and launch a polling question. And as we do that, then I am going to answer some Q&A also as you get the ability to do that. But this question is pretty simple. How many employees does your church have? Is it only the pastor? Is it 2 to 100, 100 to 499, or 500 plus? Those divisions are intentional. And then we will try to answer some of the questions that have already come in. And so most of the questions that are coming in have to do with, or a couple of the questions have to do with, what if we have a preschool or a daycare in our facility, like a day school employee or a part-time school that is housed within the church? So here's the answer to that. First of all, the first question we need to ask is it operated by the church or is it separate from the church? Does it operate under the church's EIN, or does it have its own EIN and set up as a separate corporation? If the answer is that it is operated by the church under the church's EIN, then the church has these responsibilities. If the answer is that it is a separate corporation with its own EIN, then it has these responsibilities as the separate entity. This gets into, should it be a separate entity? I won't go there today, but my short answer is perhaps you should think about that in the future, but you can't do that right now. So if these persons are employees of the church, they're operating under the church EIN and the church is handling that payroll responsibility, then the church has this responsibility. And so I hope that answers that question. If it did not, then ask a clarifying question there. And kind of a follow-up to that, someone is saying, what if we have a preschool and the teacher is out due to both that school is out and they are a parent with a child at home? And so this gets a little complex, and it all has to do with timing. So are they still on payroll? Are they still being paid? And if they are still being paid, and they were not laid off prior to April 1st, then the answer is the church does have this responsibility, assuming that the preschool is paid by the church, as I answered before for Liz. And so then the church is going to have this responsibility, and they could avail themselves of these credits, and you have a responsibility to let them know that. Now, the good news is that they're fully refundable, so the government's going to end up paying for those credits. But that's the good news. Now, if they were laid off prior to April 1st, then they're going to go the unemployment route. And we'll talk about unemployment in a minute. So it all depends on whether they were still on payroll, still being paid by the church, or whether they were laid off. If they were laid off prior to, now don't lay them off now. Can't do that now. Not now that we're past April 1st, not without talking to an attorney first. But if they were laid off prior to April 1, then they are going to qualify for unemployment. And I know some of you are saying, wait a second, churches don't qualify for unemployment. Hang tight. I'm going to talk about that in a minute, but there are some provisions that are going to help them out as well. So hopefully that helps to answer your question, Sue Lynn. If not, then ask a follow-up. Someone else is asking, please clarify the provisions for sick leave if an employee is taking care of his or her own children at home, but no one is ill. So yes, Martha, if the employee is taking care of the children at home, no one's ill, but they're taking care of the children at home because the schools are closed or the childcare facilities are closed, they're under the age of 18 and they're closed because of this emergency, which is true for all of us, then yes, they're going to qualify under these provisions. So I hope that answers that question, assuming they are not able to telework. Now, if they're able to telework, then they're not going to qualify. Another question here, what if the responsibility of an individual is primarily outside of school hours, i.e. Sunday morning digital worship? And so the question here, Will, is all going to boil down to, are they able to telework? So if they are able to telework or handle their responsibilities, they're still able to do their job, then they're not going to get these benefits because they're still able to do their job. If they are unable to do their job, they're not able to telework, and we have closed our buildings, and they say that they don't have the time to do this work because of these other responsibilities, then they could have those credits that would apply to them. How do these provisions apply to independent contractor workers? I think I answered that, Tim, but the short answer is they don't. They would have to claim it on their own. Now, whether they should be 1099 or not is another discussion. We have some scholarship singers, another person says, who are 1099 and they cannot work. How do we handle them? First of all, they may or may not should be 1099, but the fact that they are 1099 means that they don't get any help by this from you. They might get help under unemployment or on their own. We'll talk about those provisions a little more in a little bit, but they would not qualify for these benefits. What is the aggregate? Yes. So great question, Monica. That means the total amount. That's exactly right. So the total amount that is dispensed under these provisions, that's what I mean by the aggregate. So when we add all of those weeks together for that particular employee. So great question there. Hope that helped to clarify. Does this exclude a part-time janitor? No, the part-timers would be included. And so, again, there are part-time calculations, and we're going to use 2/3 of their normal pay up to, and depending which provision, but in general, the $200. And so it's the lesser of 2/3 of their normal pay, or $200 is the way that is calculated. Great question, Rodney. Anthony says, hey, I'm the finance guy for the childcare of the preschool. Separate EIN, but a ministry of the church needs some guidance. Paying this out and not having the cash flow to do so. What is the time period for reimbursement for the federal government? We laid off our employees prior to April 1. So if you laid off your employees prior to April 1, you're not going to have this particular responsibility, but they will qualify for unemployment. And so hang tight. We're going to talk about those unemployment provisions in just a little bit. Fantastic. Sulin says that did answer it. Melody saying the church is a preschool separate EIN, but the church's bookkeeper handles that payroll and is not paid by the preschool. I'm not sure I understand the question, Melody. When you say but is not paid by the preschool, are you saying that the church is handling the payroll and the church is paying the payroll? If the church is paying the payroll under their EIN, then the church has the responsibility. Even if the preschool has a separate EIN, it means that the corporate veil has been breached, and the church is handling that under their EIN and not the preschool. So the corporate veil's been breached, and the church is going to have the responsibility. So I hope that answered the question. If it didn't, ask follow up. Danielle saying, hey, I'm in Louisiana. Hey, I grew up in Louisiana. K through 12, all in Baton Rouge. So good to see you, Danielle. We have a stay-at-home order through the month of April. I have a Parents' Day Out program that has been closed due to this. So do I have to pay all the teachers through the end of the month? The short answer is if they were not laid off first, then you may have a responsibility under these provisions if they have if they have children at home and they are caring for those children and they're unable to do so. Now, if you laid them off prior to April 1, then that's another matter. But if they were on the payroll on April 1 and you were still paying them, then you may have these provisions. Do these provisions apply to part-time workers unable to telework? The answer to that is yes, they do. Paul is asking if they can telework but are homeschooling, then do they qualify? Meaning they can't telework because they're caring for kids at home. Yeah, I get what you're saying, Paul. The short answer is if they say that they are unable to meet the responsibilities of their job because they are homeschooling full time, and so they're unable to meet the responsibilities of their job and they're unable to telework because of that, then yes, they would qualify under this provision. If they are able to telework, then they're not. So I'll use my wife and I, for example. Okay. Many of you know Paige. She is also an elder in this conference in Holston, meaning she's one of our clergy. And I also am a clergy person within this conference, and neither of us would qualify for these provisions because we are able to telework, right? So even though, and the bulk of this responsibility is falling on Paige, and I appreciate her so much because I tend to be very busy this time of year, but Paige is working during homeschooling during the day, and then she's doing her church work in the evenings and weekends, and it is hard and she is tired. But she is able to telework, so she would not qualify. So I hope that helps to answer that question, Paul. Okay, Danielle, if you have continued to pay them to date, then you could, and actually this is good news for you, they could get benefits under this provision and the government is going to help you to pay for them, right? And so that's actually good news for you, is that they could qualify under this provision. Does the school being closed due to following the school calendar qualify as teachers being laid off? Not sure that I fully understand the question, Sulin. Are you saying that the school would have been closed regardless of whether or not this virus took place? If that is true, then it probably wouldn't qualify. But if it is closed due to the virus, then it would qualify. So I'm not sure if I fully answered that or not. Hopefully I did. Y'all are having some great questions. Okay, remember, if you have questions, throw them into the Q&A. That is what I'm monitoring. We're going to go back to the Coronavirus Aid, Relief, and Economic Security Act. But before we do that, I am going to go ahead and answer or throw up another poll here for us. And the poll that we are answering now is, as a result of this pandemic, my church is, and our options are, in good shape and does not need any help with expenses, is probably okay but could still use some help, or is in real trouble. We need this. So I'll give you a moment to answer that. Okay, Amy, the answer to your question is yes. I'm not going to do it out loud because it doesn't necessarily impact the entire crowd. Okay, yeah. If Sulin, if they're closed due to the virus, these provisions are going to be in effect. And another person asking, a part-time custodian was on leave, medical leave, before this outbreak until mid-March, and then this unfolded. No hours needed because the building is shut down. Do they qualify for this? So short answer is, are they still on medical leave? Would they still be on medical leave? If they would have come back, then these provisions do apply. If they would still be on medical leave, then these provisions would not apply. So hope that helps to answer your question there. Paul is asking if if the pastor is the only employee and the church doesn't qualify for a group health plan, can the reimbursement be made to the pastor for his individual health coverage and be included in the compensation calculation? The answer to that is no, Paul. It could not. It needs to be a group health plan in order to be included in this calculation. What if the employee insists that you not pay them? The short answer is they cannot. You still have to pay them. Now, they can choose to give it back. Every church I'm aware of will allow an employee or anybody else to contribute to the church pretty much. So they're certainly allowed to give it back, but you have a requirement to pay these benefits. So hope that answers your question, Vicki. Valerie saying, as a part-time minister of music, would they qualify for unemployment benefits? Hang tight until I talk about unemployment. We're not there yet. So hang tight until we talk about that. Day school is closed due to the virus. Our day school teachers are not being paid during this time. Does this count as being laid off? The short answer, Liz, is it depends on whether or not it happened prior to April 1. And so if they quit being paid prior to April 1, then you probably need to consult an employment attorney, to be honest. The safest thing to do is to start paying them under these benefits. That would be the safest thing to do. And being able to do that would probably be the safest. However, if they were laid off prior to April 1, they may qualify for unemployment. I would run this situation by an attorney. Honestly, Liz, I'm not an attorney, so I'm hesitant to give you that advice. It's also a little bit state specific, and I'm not in Tennessee. And you are, I believe. Is the Paycheck Protection Program a part of the CARES Act? Yes, it is, Brad, and we are going to talk about that. We're going to spend significant time on that, so hang tight. Our choir director retired, Kelly says. We hired an interim director on or about February 15th at the weekly rate until we could hire a replacement. We paid him the weekly rate for each week in March. Do we have to include him in the leave pay? The short answer is yes, you do. We have 2 full-time employees, including the pastor, 5 part-time. So the answer is, Kelly, yes, you do, assuming he qualifies and meets the provisions here. All right, we're going to get back to the CARES Act because there's some other help here. This is the Coronavirus Aid, Relief, and Economic Security Act. It's commonly called the CARES Act. It was signed by the president on March 27th. It's public law number 116-136. If you really want to go look it up, it's pretty massive. I have read the entire thing. I don't recommend that you do so unless you're a glutton for punishment. But key provisions for us, I've given you the section numbers in case you want to go look them up in the law. But they're the Paycheck Protection Program, the Loan Forgiveness Program, the Emergency Disaster Grants that we're going to talk about, the subsidy for certain loan payments, Pandemic Unemployment Assistance. We are going to talk about that. Recovery rebates for individuals, the use of retirement funds, and the waiver of the required minimum distribution rules out of retirement accounts, the partial above-the-line charitable contribution deduction that we'll talk about, and charitable contribution limits that have been increased. In addition, there are employer payments of student loans. I'm not going to talk about that, but you need to be aware of that. There's an employee retention credit. I will talk about that. and the delay of payment of employer payroll taxes that I will talk about. And then I will not talk about the technical corrections, but they are there as well. So this next part, the recovery rebate for individuals, this presentation was actually developed by a friend of mine. We taught together yesterday. And so I have stolen, and I've edited a little bit, but I've stolen this part of the presentation with his permission, but I want to give him credit because I didn't create this. So rebate check. First of all, for adults, assuming that they have filed an 18 or 19 return, and no one else can claim them as a dependent, then single persons get $1,200, married, filing joint get $1,200, head of household still gets $1,200, but you also get $500 for each additional child under the age of 17. So this follows the child tax credit rules there. But notes to be aware of there is that under the age of 17 is important. But if someone is claimed as a dependent on another person's return, then that person will not get a check. So this will most commonly affect our college students. So our college students, where the parent claims them as a dependent, they are not going to get a check. And by the way, the parent's not going to get a check for them either because they're over 7 or they're 17 or older, right? And so you need to be aware of that. If you are claiming your children as a dependent, they're not going to get these checks, even if they are in college. All right, the income threshold, we do begin to phase out if we are above $75,000 for individuals or $150,000 for married, filing joint. And I'm not going to explain that whole phase out, but just be aware of that it gets reduced, the amount that you get. But as a single person up to $99,000, you still get something. Up to $198,000 as married, filing joint, you still get something. Head of household up to $136,500, you still get something. So be aware of that. We actually get to add to that calculation for children. This math is a little complex. I've put it in your material. I'm not going to go through it, but it's in your material. So what is the IRS going to look at to determine any of the information above and whether you get a check? The bottom line is they're going to look at your 2019 return if you have filed. Now, we don't have to file yet because we have a July 15 deadline this year. We got an extension. So many of us have not filed, myself included. But in our cases, they're going to look back at the 2018 return. Now, if you have not filed 2018 or 19, you don't get a check. There's one exception to that, or two exceptions to that. I'll talk about that in a minute. But if you have not filed your returns, you need to get busy and file those returns immediately, because you're not going to get a check if you don't have 18 or 19 filed. So just be aware of that. What is the fastest way to get the check? It is direct deposit. So if you had your direct deposit information on your tax return, 18 or 19, well, they're going to look at 19 if you filed 19, but if not, they're going to look at 18. If you had your direct deposit information on that return, then they are going to be looking at the direct deposit information from that return and will automatically send your amount there. So be aware of that. Now, if you did not put your direct deposit information on your 18 return, this is a good reason to go ahead and file 19 quickly to get your direct deposit information in there. What if I made less money in 19 than in 18, and it will make a difference on my check? So yes, there are some strategies there that you can think about whether or not you want to file your 19 return. It could be a situation where you intentionally decide to wait on filing your 19 return because you would qualify for a greater stimulus payment or rebate check based on your 18 return. Nothing wrong with doing that, by the way. You can perfectly legally do that. What if I have not filed for 18 or 19 because I had no income? Then you need to file right away. There's one exception to that I'll talk about in a minute, but a good example here is a full-time student, grad school. They're not somebody else's dependent, but they don't have a ton of income either that's taxable and they haven't filed. They need to go ahead and file. All right, what about the only income being Social Security? Well, they don't have to file either. There's been a little bit of flip-flop on this, but the bottom line is they do not have to file either. The IRS is going to use the SSA 1099 or the railroad retirement benefits, if we have anyone in that category, and they're going to use that information to generate the payment. What if I didn't put my ACH information? Then you have to wait on a check. It's going to take quite a while. But what if I was laid off in 2020 due to this? And I made too much money to qualify in 18 or 19. What do I do? Well, the short answer is you're kind of out of luck in the short term. The good news is that you will get some benefit once you file your 2020 return. You're going to get a credit on the 2020 return, but that's not going to help you today. All right. Is the check going to be considered taxable income on the 2020 return? That answer is no. If my income is higher in my future 2020 return, do I have to pay it back? The answer is no. What if I owe the IRS on back taxes? Are they going to offset my check? The answer is no. Now, there is one situation in which there will be an offset, and that is child support. So if someone is delinquent on child support, they will offset for that purpose. Is this a one-time check or is there going to be more? My answer to that is it's a one-time check, at least at this point. Now, could Congress do something in the future? Who knows? But it would take an act of Congress literally to authorize that. When is the money coming? The first payments are going to go out on April the 9th. So you heard it here first. First payments are going to go out on April the 9th. The IRS originally said April the 6th. That is not going to happen. But they will. The first payments will go out on the 9th. Now, if you need checks, let me just tell you our current situation at the IRS. Everybody's at home, just about. They're all teleworking because of this situation. Translation, no one is there to send these checks out. So it could be a bit, quite frankly. So your best thing to do is to get that direct deposit information in. And if you have to file a 2019 return to do it, do it. But you want to get that direct deposit information in. Now, the IRS is saying they're going to open up a portal where you can go and enter that information. We haven't seen what that looks like yet. I personally have some big concerns about that in terms of fraud and hackers. And anyway, my advice is just file the 19 return, include your direct deposit information on there, and then you will get it. Even if you didn't put it in by April 9th, they're going to continue to be issuing these as they get those returns. They'll continue to issue these throughout the year. All right, we're going to talk briefly about unemployment, but before we do that, I'm going to go ahead and launch our next polling question. And by the way, if you're curious on the last poll, 65% of you said it will probably be okay, but man, we could really use the help. But nearly a third said we're in real trouble and we need this. We did have 8% that said, you know what, we're in good shape. We don't really need any help with the expenses. So that's where we are on that. This next poll that I am going to ask you is a follow-up to that, and that is, when do we need help? We need help within the next week or we won't meet payroll. We need help within the next month or we won't meet payroll. We need help within the next 60 days, or although we could use the help, we're still going to meet payroll. We're in great shape. We don't need the help. So if you can answer that, that will just help me to kind of know how to steer us a little bit and how much of each options I need to cover. While you're doing that, going to take a look at some of the questions here. Valerie asking, does a part-time minister of music qualify for unemployment? Hang tight, Valerie. We're going to deal with unemployment in a minute. If we're applying for the payment protection plan to continue full payroll, do I need to do anything with the leave pay? The answer is yes. The leave pay has to be dealt with regardless of the PPP or anything else. It is a requirement that has to be dealt with, and it comes first. So you do have to deal with that first, those benefits. Rebate check. If direct deposit account was closed after the last return was completed, that's a bummer. So, Steve, you need to file a 19 return and fix that quickly. Otherwise, it'll come back to the IRS and eventually you would get a check. So I would file a 19 return, short answer. Monica, do you know what might happen if the ACH info is changed? Same exact answer I just gave. Will college students who filed for 2018 not claimed on anyone else's return receive a check? So the way the law is written is if they could be claimed as a dependent on anyone else's return, they will not receive a check. The IRS, practically speaking, has no way of checking that other than did they check the box when they filed their return that they could be claimed on someone else's return. So if they did not check that box from a practical perspective, they're going to get the check, assuming that the return went through and their parents did not claim them, which would have created, by the way, an automatic audit. What if you paid the IRS in 2018? Will you still get a rebate check? Jenny, the answer to that is if you paid them with your ACH info, yes. If you paid them by check, then you're not going to get a direct deposit there. So you would get a check ultimately, eventually. But if you paid them electronically and they have your bank account info, you'll get the check. If you paid them with a voucher and mailed in a check, then you would not receive it by direct deposit. You'd have to wait on it to come in the mail. So I hope that answered your question. Of course, you can always file 19 and fix that. All right. Looks like we are doing great. Got some questions in chat. Don't ask questions in chat because, frankly, I'm probably not going to answer them. I look in the Q&A is where I look. So I ask them in the Q&A. That's where I can track them. All right. Looks like on this one, roughly half of us say we need the money within the next 60 days. We have one person that says we need it within the week or we won't meet payroll. We have about 13% of us that say within the month or we won't meet payroll. We have another 40% that say we could use the help, but we're still going to meet payroll or we're in great shape. One of those two. So fantastic. We got some good answers there. All right. I'm going to go through unemployment, then I'll come back to some other questions. So who is a covered individual? A covered individual is not eligible for regular compensation or extended benefits. So these extended benefits that I just talked about, the paid sick leave or the expanded family leave, those are extended benefits. They're not eligible for either of these, and they have exercised all of their normal things. They provide self-certification that they're unable to work, but that they are available to work. Within the meaning of state law, they're simply unable to work because either they themselves have been diagnosed or experiencing symptoms, or a member of their household has been diagnosed, or they're providing care for a family member or member of the household who has been diagnosed, or, and key in on this one, a child or other person in the household for which the individual has primary caregiving responsibility is unable to attend school or another facility that is closed as a direct result of this public emergency. And such school is required for the individual to be able to work. In other words, they're not able to telework. So they would qualify. Otherwise, they're able to work because the individual is unable to reach their place of employment because of a quarantine or like stay-at-home order, right? So lots of our places now have stay-at-home orders. If they're not considered in an essential business, then they're going to have to stay home and they're going to qualify for unemployment. Or they have been advised to self-quarantine. Or they were scheduled to commence employment but are unable to start that employment because of this emergency, or they suddenly became the breadwinner or a major part of support because someone in their household died as a result of this, or they felt they had to quit their job as a direct result. They were they were in an area that they felt was putting them at too much risk, and they were in an at-risk category, and they had to quit their job as a direct result. They then are going to be able to file for unemployment. Or the individual's place of business is closed as a direct result of this, or they meet any other criteria that the secretary may establish. Bottom line is, if you're impacted in any way, shape, or form by this thing, and you're unable to work and be paid, and you don't qualify for any other benefits anywhere, then unemployment has been greatly expanded. It even will cover self-employed individuals now, which is highly unusual, or persons who don't have sufficient work history or don't otherwise normally qualify for unemployment, but they will let them qualify now. It does not, however, include an individual who has the ability to telework with pay or an individual who can receive sick leave or paid leave benefits that we just talked about. Now, nonprofits are added in, even though we normally are not. During this pandemic, nonprofits are included in unemployment by federal statute. And so this is a huge deal that our employees can now go get unemployment. The covered time period is January 27th through the end of the year, but the increased pay is only through July 31st. That increased pay, by the way, it's a little bit beyond the scope today, but it's basically whatever the state pays plus $600 per week. So it's pretty significant. And it shall not exceed 39 weeks for a covered individual. And as I mentioned, it is extended to include nonprofits and governmental entities, even though we are exempt and most of us don't pay into the unemployment. We don't pay our SUTA and we don't pay our FUTA. Special rules for use of retirement funds. Let's talk about that real quick. Tax favored withdrawals on retirement plans. So there's a section of the Internal Revenue Code called 72T that gives exceptions to the early withdrawal penalty. And it has now added to that section for 2020 any coronavirus-related distribution up to $100,000 in the taxable year. And it is also said that it can now be repaid within 3 years and treated as an eligible rollover as if it were trustee to trustee within 60 days. Pretty big news here. So how do you qualify, or who is eligible? Well, first of all, it has to be in 2020. The employee self-certifies, and that is sufficient. There are 3 ways that this can happen. They're either personally diagnosed, a spouse or dependent is diagnosed, or they experience an adverse financial consequence. This can be a furlough. They can be laid off. You can have your hours reduced, unable to work due to lack of childcare, closure of the business, reduced hours of the business, pretty expansive. They self-certify, say, I have had adverse financial consequences, and you can pull out up to $100,000 from your retirement funds and not be subject to the early withdrawal penalty. Now, you can also do loans up to $100,000, and that has to be done within 6 months or 180 days of enactment, which was March 27th. If you have an outstanding loan against your 403B, that's your, against your UMPIP or something like that, you have an outstanding loan, and that repayment was due to come in within this calendar year, then that is going to automatically be extended by 1 year. So they're going to give you an extension, an automatic extension on that repayment. In addition, we have a complete waiver of the required minimum distribution for 2020. Why is this significant? Because most of us, if you have made the mistake like I have of looking at your retirement accounts, since this all took place, you figured out that your net worth decreased because it has not been good. Whether you're in bonds, stocks, whatever you're in, it has not been good. Sometimes I wish I had looked, right? So the good news is we do not have to take any RMDs. There are no required minimum distributions for 2020 because the last thing you want to do is sell or get out of something when it's low unless you absolutely have to. So they provided some provisions here where you can pull that money if you have to live. But they don't want you to have to pull that money if you don't have to, because you do not want to sell when it's low. When it's low, that's when you want to increase your contributions, if you can, into your UMPIP and those sorts of things. When it's low, that's when you want to buy, not when you want to sell. So waiver of RMDs is a pretty big deal. Let's talk about charitable contributions. We're going to get an up to $300 above the line contribution. So even if we don't itemize, which is the great bulk of us, by the way, only 8% of Americans itemize under the new law. Actually, 7.8% is the real number for tax year 2018. So we can now take $300, up to $300 above the line and not even have to itemize as a charitable contribution. So that's pretty big news for us as churches. Also, there is a 60% limitation for individuals. Some of you are saying, wait a second, Knox, I thought it was 50%. It increased under the Tax Cuts and Jobs Act. So beginning with tax year 18, it became 60%. And for tax year 20 only, it will be 100%. In addition, the corporate limitation, which has been at 10%, increased to 25% for 2020. And if you are running a food pantry, contributions of food inventory are increased from 15% to 25%, which is a pretty big deal for C Corps. So that's a pretty big deal as well. We're going to talk about the payroll protection plan and the emergency disaster loan and those grants in just a moment. But I want to go back and take a look at the last poll that we opened up and actually throw in another poll here. So let me see what poll. Maybe I don't. I already threw it up. Awesome. Okay. So the last poll I already gave you. Perfect. All right. Let me look at the Q&A here and see where we are. And it says, Valerie, does a part-time minister of music qualify for unemployment benefits? She was released prior to April the 1st. If she was released due to the coronavirus, not, due to cause, then yes, she would qualify. And so that is the answer there. And if a church wants to continue to pay all its staff during this time, are there any IRS requirements? Hang tight, Jeremy. I'm going to talk more about that in a minute. So hang tight. Alyssa, our pre-K is closed. We have continued paying our employees. Question is that we were not ordered by the feds or state to close. We are actually encouraged to remain open. So do our employees qualify? We are in Tennessee. They would not qualify for unemployment. They would qualify if they meet the conditions for the paid sick leave and for the emergency family leave that has been expanded. So I'm not sure which you were referring to, but hopefully that answered either way. Preschool closed in mid-March due to the virus. 2 teachers came back on April 1 to clean for that day only. You guessed it. Those 2 teachers are covered and could potentially get these benefits that we talked about related to the paid sick leave and the emergency family leave if they qualify. Do payroll for some individuals, not churches? Are the delays of payroll taxes affecting everyone who pays payroll taxes? Hugh, I haven't gotten there yet, so hang tight. If no full or part-time staff meet the criteria for leave pay, can I skip that part of the calculation? Yes, Sandra, you can. If no one qualifies, then no one qualifies. What happens if you did not receive a refund in 18 or 19? Same answer as before. If you paid in and gave them your bank info in the process, paid it electronically, then they have it. If you sent in a voucher, then they do not have it. And so ultimately you would get a check eventually. Supposedly the IRS is going to set up a place where you can go in and put direct deposit information in. It's not up yet. Don't know what that's going to look like, but supposedly it will happen. Chris, can we continue to pay those unable to telecommute at their full rate, or must we pay only 2/3 of the salary? So if you are paying them under the paid sick leave or the emergency family medical leave, expanded family medical leave, it's going to be 2/3 of their salary up to the limits that we discussed. But remember, they have to qualify. So for the emergency family leave, they only qualify if they have a kid out of school that they're caring for. Now, the paid sick leave is different. So go back and look at those slides in the material, and hopefully that helps to answer that for you. What are the steps for the 1099ers to get the credits? Hugh, that's beyond the scope of what I can talk about today. Sorry about that. If you want to email me, I'm happy to talk to you more about that, but I'm just limited on time and I have to manage that a little bit. Will churches are considered an essential business in Tennessee as long as distancing and 10-person limits are observed? Thoughts on how that impacts unemployment or other credits? So if they're still able to do their job and you're still paying them, they do not qualify for unemployment. If they are still able to do their job, and then they're not going to qualify for paid sick leave or emergency family medical leave either, because they're still able to do their job. So this is for people that are unable to do their job, including telework or whatever. They're unable to do their job. Then they're going to qualify for these other provisions. If we continue, Vicky says, to pay our employees the full amount of their payroll check, can we meet the requirements under the law, and can we get reimbursed help with reimbursement of those funds? So under the provisions of the paid sick leave and emergency family leave, you're going to get reimbursed up to the limits of those particular divisions. Now we're going to talk about some other options here in a minute. But if you were asking about those, that's the answer. State of Tennessee, yeah, so Kate says, State of Tennessee lists churches as essential. Knox County does not. How does this affect the stay-at-home order? So bottom line is the law says federal, state, or local. So you have a local that says stay at home. That's the bottom line. All right. David says, what about graduating college students that cannot get a job right now? Can they get unemployment? Fantastic question, David. Short answer is if they are already graduated, say they graduated December or so, they were looking for a job, they're unable to get it because of this, yes, I would encourage them to apply, because my interpretation would be that they would be eligible beginning January 27. Do you have to, now if they're still in school, that's going to be a different answer. Do you have to terminate or lay off an employee for them to collect unemployment? Yes, or they can have reduced hours. But Patty, do not go lay off anyone now without talking to an employment attorney, because we are past April 1st and there's some teeth there. So be careful. Don't misinterpret what I'm saying to go lay off somebody now. I'm not saying that. I'm saying the opposite. Alyssa says that our employees can apply for unemployment benefits. Our board decided to close our pre-K. We have not laid anyone off. So if you have not laid anyone off, then yeah, you need to consult an attorney before you do that. That's absolutely correct. And they potentially qualify for paid sick leave or emergency family leave if they qualify under those. And you would have to carry out those provisions before anyone was laid off, is the short answer. But again, I'm not an employment attorney. And for specifics on that, my encouragement to you is to consult an employment attorney. Do the special rules for withdrawal of retirement funds include amounts that might have normally been in an RMD? In other words, can the withdrawal be reinvested at a future time when possible? Yes, would be the short answer. Linda, yes. Where are the forms to file coming from? Rance, I'm not sure which forms to file you're talking about. Are you talking about filing your normal 2018 or 2019 tax return? Are you talking about filing this Form 7200? Are you talking about filing the 941s for employee or for payroll taxes? If you can clarify on that, then I can probably better answer that. What about part-time employees who have another job like teachers? Are they still unemployed? If they're still receiving an income and they are above the threshold, then no, they still have an income, so they would not qualify for unemployment. All right. About the church in Tennessee, we're under orders from the bishop to close. Yes, they are under orders to close. All right. I was thinking about college students graduating the beginning of May and beginning to look for work. They're not going to qualify yet, David, because they're not graduated and the expectation would not be that they would have the job yet. So, but they could still qualify after they graduate if we're still in these environments. And I think we're going to be. So they would not qualify today, but they could qualify after they graduate. Why can't I see the Q&A even when I get notification of a new question? That is because I chose to not let everyone publicly see all of the Q&A. I'm calling them out though. So that's the answer, Scott. All right. What is the difference in layoff and furlough? Excellent question. This is an area of employment law. So let me give the caveat. I'm not an employment attorney, but here is my layman's understanding. Furlough means you intend to bring them back. Furlough means these are persons that are furloughed because of a specific situation at that moment. They're probably still on your health plan. They're probably still on your benefits. You're fully planning to bring them back. You're just unable to pay them for this period of time, and they're unable to work for this period of time. Layoff is different. Layoff says we are laying you off and there is no expectation that you are necessarily coming back. That's the basic difference. But again, consult an employment attorney to get a more full answer. College students seeking summer employment, can they apply for the unemployment? That would not be true until that point. So, but at that point, yes. Okay, the 7200 rant says is what they're looking for. It's in draft format yet, so it hasn't been completely published, but the short answer is you'll be able to get it at irs.gov. Or if you email me, I'm happy to send you that draft and give you a copy of it because I obviously have it. If you receive Social Security, did not have taxable income for 18 or 19, will you receive the $1,200? The answer to that is yes. Laurie, I'm sorry, I didn't mark that one. I need to mark it that I answered it, or I'll go back to it. Sorry, if I don't follow my system, I'll get confused. Laurie, how do we file with state unemployment? For instance, in Georgia, they don't seem to be paying the federal amounts yet. The person I'm thinking would not qualify for state employment normally. So yeah, this is state specific. Tennessee and Virginia have both bought in. I can't answer on Georgia. Don't know that answer. I think they all will buy in eventually, but you may just have to check with the state is where you file the normal unemployment office. All right, I've got to get back to the material. We've still got lots of questions. I'm going to come back to them when I can, but someone's saying I'm not seeing the questions. I am answering them. I'm calling them out. All right. Payroll protection loan versus the emergency disaster loan and the grant. How do I get cash as fast as possible? So this is for the individual that said, I need cash within the next week or I won't make payroll. So we're going to answer this question. So Is it the payroll protection plan loan? Is it some SBA loan, or is it some secret way I heard about on the internet that I can go get $10,000 in cash real quick, but I don't want to go meet some dude in the back alley? Obviously, it's not that, but we're going to answer what it is. So before we do a deep dive into the payroll protection program, which is going to help a lot of people, we're going to baseline the main primary options available. There is a quick $10,000 emergency grant that you can qualify for, and we're giving you the information on how to do that. There is also an SBA Economic Injury Disaster Loan. I'm going to give you the information on that. And then there is the Payroll Protection Plan. And I'm going to give you the information on that. So the fastest way to get financial assistance that does not have to be repaid if it is used correctly is the EIDL grant. It is $10,000, and it must be used for specific broad purposes. Those purposes can include payroll, mortgages, lease, or in some cases, meeting other obligations and debts that you don't have the ability to pay because of a direct impact by the coronavirus. But I strongly encourage you to use it for the first two if you can, because the other is going to require more paperwork. If you are using the payroll or the Paycheck Protection Program, though, then that loan forgiveness is going to be reduced by this $10,000 grant. So you need to sort of weigh all the options. But if you need the money fast, then the $10,000 grant is what you're going to want to do. You can apply for that program today. You apply online, and the money will be directly deposited into your business accounts, and it will be available in days. Now, it's supposed to be, according to the law, available within 3 business days. I can tell you that has not happened yet. No one that I know has been funded yet, and it just opened up Monday. So the reality is that the SBA has 2,500 employees that are underwriters and can do this, and we have seen already like 200,000 of these loans, and they have to manually press the button. So it's quick, but I can't tell you how long. I think it's going to speed up. They're trying to hire more people, even as we speak. They're trying to move people from other parts of the government to help with this. But it's going to be available in days. My guess is it's going to be a week, but that's my guess. So this immediate $10,000 emergency grant, they're calling it immediate. I call it quick. You need to plan for about 10 minutes to get through the application. So it's not a huge deal there. Here's what you need in terms of information. You need your federal EIN, and you need the date that the church started. So those are 2 things that you need. You need your gross revenue for the 12 months prior to the disaster. So hopefully you have good financial records and you can find that. It's going to ask you for your cost of goods sold. You're going to put a 0 there. And then you need your business bank information, your bank name, your account number, and your routing number. Now, I highly recommend that you open a separate bank account just for this, because you're going to have to be able to prove how you spent this money and that you proved that you spent it on qualified purchases. And I would rather you only have to provide bank statements and have the SBA looking into where you spent your money on the money they gave you and not your total operation. So my recommendation is that you open a separate bank account and you use it solely for this purpose. You get the money deposited into there and you spend the money out of there that is related to this purpose. Now, you may transfer the money out of there to your main operating account for payroll, for example, but then you could just make a note, this was payroll, whatever the case may be. But you're going to track that money that way is my recommendation. It is going to ask you for the owner's name, and we don't have an owner, right? Because we're a nonprofit. What you're going to do there is you're going to put the officer's name who's filling out the application, but you're going to put the ownership percentage as 0. So that's what you're going to do. You're going to put the officer's name, treasurer, whatever. It should not be the pastor, by the way. Now let's talk polity for a moment. You should not take out any loan on behalf of the church solely on your authority, whoever you are on this call. No clergy person should go take out any loan for the church, right? Ever solely on their authority. No church treasurer should ever go take out a loan for the church solely on their authority, ever. No finance chair should go take out a loan solely on their authority, ever. You need administrative counsel or church council permission to take out a loan. You say, wait a second, Knox, but this is a grant. Yes, but it's a combined application with the emergency loan. So it is my opinion that best practice is to get your church council to bless doing this. Now, you can do that in a phone call, a conference call. You can do that by email. You can do it electronically. You do not have to meet in person. But I think you need a recorded church council or administrative council, leadership team, whatever you call it in your church, vote authorizing an individual, whether it be the church treasurer, it should not be the pastor, but whatever individual that is, to go and to make this application. In my church, I have called a church council meeting for Sunday night, and we will be talking about our various things and getting approval there to do what we need to do on Monday morning. So I'm just telling you what we're doing, but that's sort of a polity answer there that we need to think about. All right, so this immediate $10,000. What if I already began an application on SBA.gov for an EIDL loan prior to Monday? Because I read on the internet I could go do this. Will that previous application default me into the $10,000 grant, or do I need to go back and submit a new application? The bottom line is you need to go back and submit a new application that is specific to COVID-19. Again, this is new. I don't know of anyone who's actually received the grant yet. All right. More money than the $10,000 grant or the payroll protection program, the paycheck protection program, but it's going to take longer to get it, is the economic injury disaster loan. It is the same application that you fill out for that $10,000. So when you fill out that $10,000, you are actually filling out a loan application. And there will be an SBA underwriter who contacts you down the road. So you're just going to one day see the $10,000 pop into your account, most likely, or you might get an email first. But down the road, 20, 30, 45 days, you're going to get contacted by an SBA or Small Business Administration loan officer to talk to you about your needs for an economic injury disaster loan. It's going to automatically happen when you fill that out. You need to think of this as longer-term support for operating expenses and debt payments for businesses that are experiencing disasters, which is most of us. You can begin this application. Actually, it began this past Monday. And you can continue to use the same form, like I mentioned. This one has far less documentation requirements than the SBA requirements for the normal EIDL. So if you applied a week ago, you need to go reapply because you don't want to be under the old guidelines. You want to be under these guidelines. You need to expect about 60 days to get these funds for the primary, the big loan. Now, the $10,000 I'm expecting in about a week. Another thing to be aware of is you can get up to $2 million, and you can use this for fixed debts, payroll, accounts payable, and other bills. It is at 2.75% on a 30-year fixed rate loan and no collateral, which means that we are not encumbering our buildings in any way, which means we do not need a charge conference. Church council can make this decision because we're not encumbering a building. Deferred payments will be for 1 year, which means you don't have to make the first payments until a year after origination, though the interest will still accrue. The loans are directly from the SBA. Don't go to your bank for this. They cannot do it. And we are eligible as nonprofits. Now, normally nonprofits are not eligible, but we are now. And if your loan is less than $200,000, no personal guarantee is required. So this is significant for churches. If you can get away with less than $200,000 on this, you don't need a personal guarantee. Now, if you need $200,000 or more, then you're going to need a personal guarantee. There's a streamlined application process. I've given you the URL in your material that you can use and go and apply. That one person that said, I need the $10,000 quick, you need to do this because that's how you're going to get the $10,000 quick. All right. Your next option, and this is the option that is going to work the best for most of us on this call. This is the Payroll Protection Program. It's a short-term loan. It's going to help you to pay for 8 weeks of payroll, rent or mortgage, and utilities. It's faster to get than an EIDL, and some, if not all, of this loan can be forgiven. We're going to talk through those provisions. If you do this right, it will be 100% forgiven. I'm going to tell you how to do it right, okay? So let me say that again. you're going to qualify for governmental help to meet 8 weeks of payroll, your total payroll, your complete payroll for most of us. There are some caveats. I'm going to talk about that in a minute. And it's going to be a forgiven loan. Now, how does that sound? That's pretty good news for most of us, right? Let's talk through the details. Big note, if you take that $10,000 cash advance grant that we talked about, then that $10,000 is going to be subtracted from the forgiven amount here. So I am not encouraging most of our churches to go take that $10,000 advance unless you need money in the next week or two. If you need money in the next week or two, go take that $10,000 grant. You need to do it. But if you don't need money in the next couple of weeks, I'm not encouraging you to do that necessarily. I want you to go for the payroll protection program in most cases. We're going to talk through that. So unlike options 1 and 2, which you go apply for at SBA, this one we do through a lending institution, a bank or a credit union. The applications actually technically start today. Now, I will tell you that the guidance on this literally came out last night. I taught on this to tax professionals yesterday from 2 to 5. We did not have the guidance before I was out of that. It was well into the evening before we got this guidance. So I had to read through the new guidance. And the reality is that most of the banks are not actually starting this today. They're saying that it'll be Monday because they're still processing the guidance and figuring out how to roll it out. There are a couple of banks that are doing it today. Most will not start until Monday. To answer the question that Hugh asked earlier, sole proprietors and independent contractors will be able to apply starting next Friday. Again, you can expect to get these funds 30 to 45 days from today. Might be sooner, but nothing definite yet. If you need money within that time frame, you need to go ahead and do the $10,000 or talk to your lender about how quick you can get it. Your bank is going to be a big determining factor in how quick you can get these funds. So if you need it in a hurry, be in communication with them is the short answer about how quickly they can get it to you. All right. The intent of this is to keep employees on payroll. The intent of this is to actually go rehire the people that you laid off. And the intent of this is to pay for specific expenses so that you don't have to shut down. Example, rent, utilities, and mortgage interest. Staying within that tent is the key to forgiveness. Let me word that in a different way. You cannot spend this money on anything other than the things I'm talking about here and get it forgiven. If you stay within the boundaries that I'm telling you, you will get it forgiven. How's that for good news, right? So we're going to talk through that. To whom can you apply? Any SBA or Small Business Administration approved lender today is going to be able to do these. And actually any other bank or credit union is going to be able to do these as well. They just have to fill out a quick application. They will be automatically approved because the SBA wants all of our local lenders to be able to do this. So what is the application period? Well, it's February 15th through June 30th, which is kind of a joke because it wasn't available on February 15th, right? So what's important to be aware of is that you have to apply by June 30. If you wait to apply beyond June 30, you have missed the window of opportunity. Now, bear in mind, this has nothing to do with when you can spend the money. This has to do with when you can apply for the money. The eligible period to spend the funds is 8 weeks from whenever the loan origination date is. So bear that in mind. There could be some strategy there. This means that you must apply for the funds before June 30 or you're going to be too late to apply. This is a 2-year max maturity. And this is as of Tuesday night. That changed. The law actually said 10. SBA shortened it to 2 years on Tuesday night. Last night, they changed the interest rate. It was 4% in the law, a max of 4%. We thought that's what it would be. Tuesday night, they said it's going to be 0.5%. Last night, they changed it to 1%. So this is what the guidance that actually came out last night said. So this is a 1% rate, which is a really good rate. Obviously, that's a great rate. And all fees are waived. There are no origination fees whatsoever. Do not go pay somebody to help you with these loans. Believe it or not, it is actually illegal for someone to charge you for helping you with the payroll protection program. Now, you might need help getting your books in order to be able to qualify. That's another matter. But in terms of actually someone helping you apply for this, don't pay anybody for that. That's ridiculous. Don't do that. There's no collateral for the payroll protection program, and there is no personal guarantee, regardless of the size of the loan. This is really good news for us. There are also no prepayment penalties, and the payments are deferred for 6 months. So no payments for 6 months. This is significant because we're going to get outside of our period and get it forgiven, right? So who qualifies? You have to have less than 500 employees. So that's why I asked that question earlier, right? If you have 500 or more employees, you're not going to qualify for this. You have to be, or you can be, a sole proprietor and independent contractor and qualify. And key for us, you can be a 501c3 nonprofit. Now, for those of us who are United Methodist, we are all 501c3s under our group ruling. And if you need a copy of that group ruling for your lender, I am providing the URL that you can click on, and you'll have another click. You'll fill out a brief application, and GCFA, which is the General Counsel on Finance and Administration, will give you a letter verifying that you are included in the group ruling and a copy of our group ruling from the IRS. So I've given you that information so that you can do that. You will likely need that for your lender. So who or what compensation can be paid with these funds? You can pay your employees, okay? You should not pay any independent contractors, no 1099ers. You should not pay them yourself. Now, we should ask ourselves, should they really be independent contractors to begin with? The answer to that in most cases is no. We have way too many churches who are breaking the law and paying people on a 1099 basis that should be a W-2. If they are regular at your church, I don't care if they're the organist, I don't care if they're the janitor, I don't care if they are using your equipment and cutting your grass. If they are regular at your church and you are paying them to do work, they are employees. You need to make no mistake about that, and they should be on a W-2. And once we get through this, you need to move in that direction and move them to W-2s. Who are legitimate ICs, independent contractors? These are legitimately the contractors you bring in to do a particular job. You bring in someone to paint a room. You bring in someone as an electrician to do something. You maybe hire a musician to fill in on 2 Sundays when your regular organist is out. And it's just for those 2 weeks, and it's not even necessarily the same person those 2 weeks. There's no expectation of continued employment there. Those are independent contractors. Everybody else within the church should be on a W-2. That is the bottom, unless they're a volunteer, obviously. But all of our employees should be on W-2s. We need to fix that. But if you do have ICs, they're going to be excluded here. They're not going to be able to pay, but they may be able to apply on their own. So you're not going to be able to continue to pay these people and get help through this program. Do not make that mistake of paying them and then turning it in for forgiveness, or you're going to have a sad reality. All right, what are we going to do? We're going to calculate our average monthly payroll cost for 2019. Now, remember, we're not going to include those 1099ers. They're not on our payroll. Just because we've been doing it wrong doesn't mean we continue the wrong. So we calculate our average monthly payroll for 2019, and then we multiply that average monthly by 2.5. For example, our average monthly payroll is $10,000 a month. We're going to multiply by 2.5. That's $25,000, or $10 million, whichever is less. So the maximum loan amount here is $10 million, or 2.5 times the average monthly payroll. So how do we define the payroll? It's the wages, the commissions, the salaries, or something similar, but there is a max of $100,000 annual salary for any individual. So if you have employees that are compensated over the $100,000, you can only count up to the $100,000. So for example, your pastor's making 120, you can only count 100 of that. You cannot count that extra 20. Okay? You need to make sure that you understand that. Cash chips are fairly irrelevant for us unless you are collecting honorariums as the church and then paying them as a part of payroll to your pastor. Vacation, parental, family, medical, or sick leave. So this is important because of what we talked about earlier with those what we talked about with the paid sick leave and the expanded family medical leave, right? That would qualify under this. Group healthcare benefits, the church portion can be added. Next logical question, well, Knox, I have one of those over $100,000 employees. Does that $100,000 include the group healthcare benefit? The answer is no. So you're going to get to add the benefits on top of the $100,000. Retirement benefits also get added in here. That's going to definitely include your UMPIP. That's the United Methodist Personal Investment Program that the clergy have and some laity have. I am also of the opinion that we can include the entire amount of our direct billed pension. So that's going to include our pension piece as well as our disability piece, and all of that insurance that's in the comprehensive protection plan. All of that amount, I believe, is going to be eligible here. However, we don't have definitive guidance on that. So that is my opinion. But we don't have definitive guidance on that. Take that for what it is. State or local tax assessed on compensation also gets added. But interestingly enough, we are not able to count federal tax. So the amounts that we reduce for federal, we do not get to count in this. Not in the guidelines, but I am of the opinion that we will be able to include our housing allowance. Remember, it says wages, commission, salary, or something similar. That is a part of the compensation. So I am of the opinion we can include housing allowance, but again, we don't have particular guidance on that. All right, documentation requirements. So to back up to that, when I say I'm of the opinion, I intend to include those calculations for my own church. And I would encourage you to do the same. You just need to be aware of the caveat that could we be wrong on that, then only that portion could be decided to be non-forgivable, in which case you would have paid 1% interest on it, which is not the end of the world, right? So to me, there's far more benefit to including it than not including it. All right, documentation requirements. This is what you're going to have to submit. You're going to need to submit your payroll processor records if you have a payroll processor. You're going to need to submit your payroll tax filings. You're going to need to submit income and expenses if it's a sole proprietorship in 1099. That doesn't apply to our churches, but it could apply if we have those 1099 employees who have to go apply on their own. If you don't have this documentation, then you're going to have to supply something that demonstrates the qualifying payroll amount, probably bank records and some good notes, maybe your QuickBooks reports. But basically, you're going to have to satisfy the lender at the bank that this is your average monthly payroll. They're going to have to be satisfied of that. That's the bottom line. What else can we pay? Well, I mentioned we can pay our payroll and we can pay our mortgage payment, but we need to be careful about this because only the mortgage interest is eligible for forgiveness. So if you have a mortgage, your principal is not eligible for forgiveness. So be careful of that. Be careful of that. Or you'll find out that you'll have part of it not forgiven. However, rent can be paid. And 100% of rent can be paid. So call that fair, call it not, whatever. And utilities can be included in that as well. Which payments are allowed to be forgiven? It's the payroll cost, but only over an 8-week window. It's the interest on the mortgages. And I probably should have taken that contractors off there because it's slightly confusing, but we used these slides yesterday as well. And that contractors is going to apply to persons who are as an independent contractor who may have other contractors. They get to include that. We would not. Interest on mortgages, like I mentioned before, the rent, and then the utilities. We're going to need to show canceled checks for anything that we paid. We're going to need to show payroll reports. We're going to need to document that we kept our employees on payroll as opposed to the previous periods, because that is the whole point here. They want you to either keep your people on payroll or bring them back onto payroll. And you need to make sure that your amount of payroll is at no less than 75% of your pre-COVID-19 levels, or that will not be forgiven. So be aware of that. And the comparison for forgiveness is probably Q1 2020. It might be Q4 2019. We don't have that guidance yet. I think it's going to be Q1 2020. The second thing to note here is that is different from how we calculated our average monthly payroll. So don't get confused about that. All right. Yes, it's 2.5 times, which would be equivalent to 10 weeks, but I said the forgiveness is 8 weeks. Why the difference? Well, the short answer is because you also have rent, utilities, mortgage insurance. You could end up paying more payroll. So be careful about that because you only get to count 8 weeks of payroll in that, but you're potentially taking a loan for the entire 2.5 times. You could have a portion there not forgivable. However, if you do, remember, it's only at 1%. You can prepay the thing. So not a big deal from my perspective, but you need to be aware of that. So that's kind of a nuance there. The other thing to be aware of is if you get this loan, you're not eligible for the employee retention tax credit, which I'm going to talk about in just a minute. And the loan forgiveness reduction of 25% has an exception. So this rule basically says that you cannot reduce people's salary by more than 25% during this period. You have to have met that 75% total, but you also cannot reduce any individual by 25% unless they're over the $100,000 threshold. You can reduce those people all day long down to the 100,000. Sorry for those of you on the call who are in that category. Hopefully we're not really going to do that, but that's what the law says. Greater than 20% owners is irrelevant for us, but remember that you can roll the $10,000 grant rather in the PPP, whatever balance there is, into the EIDL program to extend the payment term. So let's look at that. We can get that $10,000 EIDL grant to help us here in the next 30 days. Then we're going to be able to roll into that PPP loan. And then if we think we're going to have problems beyond that, we're going to turn around and roll that into the EIDL loan. Now, what of this is going to be forgivable? The $10,000 grant is going to be forgivable. The PPP loan is going to be forgivable, at least a portion of it. Remember, that'll be reduced by the grant, so be aware of that. The EIDL loan will not be forgivable, but will be at 2.75%. So you need to be aware of all of those various options as you are talking to your church council, administrative council, leadership team, whatever the case may be. So what happens if we combine that $10,000 grant with the PPP loan? This gets a little bit challenging, but we're going to make up some figures. So let's assume that we have a $50,000 PPP loan and a $10,000 grant. Well, if we just took the $10,000 grant, then none of the $10,000 needs to be paid back, right? It's just a grant. We never took the PPP loan. We're good to go. By the way, you can apply for it and not ultimately take it. So be aware of that. But that's the reality. You can only take the PPP loan and bypass on the $10,000, which I'm recommending if you don't need cash in the short term. Or you can take both the $10,000 emergency grant and the $50,000 and get a total of $60,000. But you need to be aware that that $10,000 emergency grant will likely not be forgivable in that case, or actually it's a grant, it's forgivable, but then 10,000 of the PPP is not. So essentially there's 10,000 that's not forgivable. So you need to be aware of that. But there's actually a fourth option, and this one might make sense for a lot of our churches. And that is you go get the $10,000 grant, which also puts you in the move for the disaster loan that we talked about that's more long-term, and you get the PPP loan. And then if you're approved for the economic injury disaster loan, which is not guaranteed, by the way, the PPP loan is pretty much a guarantee you're going to get approved. The emergency or the economic injury disaster loan is not a guarantee. The $10,000 is, but beyond that, not so much. Then you can wrap the repayment of whatever funds are left and roll that into that. And that might be a good option for long-term liquidity if you need that. So by combining all of it, you qualify for the much longer payment terms. Remember the 30 years on the EIDL. And you don't necessarily have to repay that $10,000 plus in less than 2 years, because remember, that's the maturity term rate on the PPP. However, be aware, like I said, there's no guarantee that you'll get approved on the disaster loan. They do pull credit on that, particularly if you're over the $200,000. So there's no guarantee on that one. Now, somebody here wants to know, what about religious protections? If I take these government loans, what is that doing for us and what are we committing to? The good news is, and I pulled this directly from the guidelines, nothing in the SBA non-discrimination regulation shall apply to a religious corporation, association, educational institution, or society with respect to the membership or the employment of individuals of a particular religion to perform work connected with the carrying on by such corporation, association, education, institution, or society of its religious activities for loans guaranteed by the SBA pursuant to the CARES Act. So this is good news for us. I know we have questions. I'm going to plow through the material a little bit, and then I'm going to come back to questions. So bear with me. All right. The payroll tax deferral. Someone was asking about this. We can defer the employer's Social Security payroll payments. And employers and self-employed individuals can do this, by the way. We can defer that 6.2%, which is the employer share of the Social Security taxes on our 2020 wages. This deferral period is March 27 through December 31. 50% of the deferred taxes are going to be due by December 31st of 2021, and the remaining will be due by December 31st of 2022. So this is another thing that we can do to help us with liquidity in the short term if we need to. Okay. Now, if you're in a church that doesn't need to do this, then I do not encourage you to do it. But if you need to, this option is available to you. This next option is a credit. So this is a refundable credit. This is not a loan. This is simply a credit. You get 50% of the qualified wages in each qualified quarter up to $10,000 in aggregate for an employee. So translation, that means you get a max of $5,000 credit per employee. 50% of 10,000 is 5,000, right? So who are the eligible employers? It's anyone who is carrying on a trade or business during calendar year 2020. Check. And with respect to any calendar quarter for which the operation of the trade or business described in the clause is fully or partially suspended due to orders from an appropriate governmental authority. Okay? So for those of us that have orders that say that we cannot meet in person and carry on worship, which would be everyone in Virginia because we're limited to 10 people. So unless you have a church of under 10 people, then you can't meet. And so that's all of us. And that is some people in Tennessee, depending on what county you're in and what city you may be in. Or you have a significant decline in gross receipts. A significant decline is defined as 50%. So if your receipts for a calendar quarter are less than 50% of what they were in the prior year, then you qualify. So you can qualify either way. It's an either or. It's either you're in an area that shuts you down during that quarter, or you have a calendar quarter where you have a significant decline in receipts. And if you are on the significant decline in receipts category, you get to count every quarter in which you have the significant decline until you get above 80%. So let's do a look at that real quick. And by the way, this goes through, we're going to look at the calendar quarter in this year is basically what we're looking at. It applies to 2020. That's the bottom line. All right. We are eligible. All 501Cs are eligible. So we are eligible. This wage calculation is dependent on whether or not there are more than 100 employees, which is why I asked that question. So if there are greater than 100 employees, then only those employees who are not providing services count. So for example, let's pretend I'm in a church with more than 100 employees. I'm not, but let's pretend I am. Let's pretend I'm in a church with more than 100 employees. I don't count because I'm at home. I'm the pastor. I am still providing services. I'm teleworking. I don't count. But all of my custodial staff, all of my daycare staff, all of those people who are not providing services, they count. Now, if I have less than 100 people, all employees count. So I count now in the less than 100 employees. However, we can't double dip. So the credits and benefits that we got under the Families First Coronavirus Response Act, that's the paid sick leave and the extended family leave we talked about, those are excluded. We do have to think about aggregation rules. So think about your daycares and schools. Even if they're under a separate EIN, but they're owned by the church, then you're going to have to include them in the employee count. That's what the aggregation rules basically say there. Third-party payers are allowed. So if you have one of those PEOs or third-party payer, then you're good to go. Let's walk through an example because it's a little complex. Let's pretend we have 2 full-time employees, right? We have a pastor and we have 1 additional full-time employee, and they each make $4,000 a month. And then I have 3 part-time employees, not beyond the scope of imagination for a church, right? Average monthly payroll is $10,000. So you can figure out from that 8 of that comes from my 2 full-timers, and the remaining 3 are split among the remaining 2,000, right? We're going to assume that they're impacted. We're going to assume that the revenue is down by at least 50% in both quarter 2 and quarter 3 and back to 80% in quarter 4. What are the options? So answer me in the chat. What do you think are the options for this particular church? What options should they consider? All right, good. Some of you are getting that. So the first option they could consider is the $10,000 grant if they needed that, right? Which would cover a whole month of payroll for them. So that could be really, really helpful. They could consider the EIDL loan. That's going to be up to $2 million. They could consider the PPP loan. That's going to be $25,000 in this case. How do we get that? We take the 2.5 times the average monthly payroll. Average monthly payroll we said was $10,000. 2.5 times that is $25,000. Or they could take the employee retention credit. Now, you can't do both. You can't do the PPP and the employee retention credit. You can't double dip. You do one or the other. But the employee retention credit says we can take that 5,000 times 2. Now, how am I getting 5,000? Because I said that there are 2 impacted quarters. I have 2 full-time employees at $4,000 a month. That's 4 times 6 months. That is greater than the $10,000 max. So I take half of the $10,000 max is 5,000. I'll multiply that by 2 because I have 2 of those employees, right? So 5,000 times 2. That's 10,000. Now, of the remaining amount of the payroll, I have 2,000 that is split between the 3 remaining part-time employees. Again, I have 6 months. So I'm going to multiply that 2 times the 6 months. I'm going to then times that by 50% or divide by 2 is what I actually put on the screen. And so I'm going to add the 10,000 plus the 6,000 and I get 16,000. My other option is I can delay a payment of the employer payroll taxes, right? So lots of options that we can look at here for this particular person. So even if your counsel does not want to take the loan with the PPP, even though it could be all forgivable, you should, in that scenario, avail yourself of the employee retention credit. And that's a straight credit. And you do not need counsel approval for that. Straight credit, no anything other than the tax law enables you to do that, which is a beautiful, beautiful thing. All right, we are going to get to some questions here because I know there have to be questions. So let me get back over here real quick and see what kind of questions we might have. All right, wow, I've got a lot of questions. And then we're going to dive into the application and how to actually fill out the application. So that is coming up in a minute. But before that, I want to answer some questions. So if a church wants to continue to pay its staff during this time, are there any IRS requirements? So the short answer, Jeremy, is you can continue to pay them, yes. If they qualify under one of these paid sick leave or emergency family leave, then you can get credits against that. If they do not qualify under that, then you can still get potentially one of these other options that we just discussed to help you with that as well. So you can definitely do that. And our goal here is to get people on the payroll or keep them on the payroll. That's the goal of Congress here, is to get people on the payroll. We can apply for the PPP until June, Carter says, but there seems to be some noise being made that the amount of money allocated for the PPP is not going to be enough. Can you provide any insight on the possibility that the money runs out before the application period is over? The money will run out. I can definitely provide insight. There is $348 billion that is allocated for this, and it will not be enough. That's the short answer. So my guess is that as it runs out, if we're not out of this thing, Congress is going to allocate some more money. But that's a guess. I cannot guarantee that. And it is first come, first served. So you need to be aware of that. So, yeah, I mean, for most of our churches, it makes sense to do this fairly quickly, possibly waiting until after we run out our FFCRA requirements, if we have some of those requirements. But I would still go ahead and make the application because it's going to be a little bit before it funds. And you can actually work with your bank a little bit on the origination date. So you can go ahead and get approved, but say, hey, can we make the origination date X when I'm done with my FFCRA requirements, for example, depending on what your scenario may be. So, yeah, but I would make the application date as soon as you are ready, as soon as you can, even if you intend to delay the origination date. All right. Hugh is asking, do payroll for some individuals? I think I actually already answered that one. Great. Thank you, Paul. Thank you, Paige. If we reduce the hours and salary of an employee, is that person eligible for unemployment? In some cases, the answer to that is yes. Rants, okay. Surely a student in school who has to pay their own bills would qualify. Met a girl in supermarket who has no family, is 19 and very scared. So yeah, no family means that they are their own person, meaning there's no one claiming a dependent upon them. And if they were employed, like working in a restaurant or something like that, they should qualify for unemployment. So yeah, if they were already employed, got laid off, they're going to qualify for sure. What about nursery workers who work part-time as needed? They have not been laid off. Yes, they would also potentially be included here. And they're going to be included in your average monthly payroll, and they would be eligible for FFCRA potentially as well. Did I answer your first question, Barbara? Probably, but I don't remember what it was. So re-ask it if you need it again. Jenny says, if our part-time employees like custodians, can they apply for unemployment? Does that fall into the medical leave status? So unemployment and medical leave are two different things. I'm not sure I understand the question, Jenny. You may have to clarify there because I'm not sure I understood the question. All right, please provide access to the 7200 form. It's not available at irs.gov. Yeah, that doesn't surprise me. It's a draft. So hang on just a moment. And I will upload it to the handouts for you because I do have it. Bear with me. It'll take me just a moment to find where I have it. I don't always multitask perfectly, so bear with me. Form 7200 draft. Share now. All right, that should now appear in your handouts. It's labeled F7200-DFT. It is a draft form. Do not file it, please. But if you want to look at it, I did upload it there for you. All right. Why can't it be the pastor filling out the application? Because a pastor does not have the authority under our polity to encumber the church or to take a loan. The loan should not be done by the pastor. And these are loans that we're talking about. You're doing a loan application. The pastor should never do that. That's Book of Discipline if you're a United Methodist. It's not clear to me, are you saying this grant is really a loan that we will repay? Not sure which one you're talking about. So the $10,000 grant, you do not repay, assuming you spend it on the terms. However, when you fill out that application, you are simultaneously applying for the economic injury disaster loan from the SBA. If you're talking about the PPP, the payroll protection plan, then in that case, it is a loan with provisions that it could be forgiven. So I'm not sure which you were asking, but I hope I answered that. UMC here, would a trustee's vote suffice to authorize the loan? Probably. I would go council, frankly, Mark. But yeah, you could go trustees. Trustees are required if you're encumbering the building. You're not encumbering the building here. And actually a charge conference is going to be required. And potentially the district board of church location is also required if you're encumbering the building. None of that applies here. For the option one, for the EIDL grant, is there a specific time frame in which those funds have to be utilized to where they do not need to be repaid, must be utilized within the calendar year 2020, Logan, and not before January 27th? So hope that answers your question. Mary says payroll is paid by the conference office and then reimbursed by our office. Conference office files taxes and provides W-2s. Do we qualify for the payroll protection plan? Does our office have a separate, or our office does have a separate EIN? So I believe that the conference is working as a third-party payer in your scenario, Mary, and that payroll is functioning under your EIN. When those W-2s get issued, they get issued under your EIN. If I'm correct about that, then yes, you would qualify. If I'm not correct about that, ask me a clarifying question or reach out to Rick or me afterwards, and we will help you with that. Can we rehire people who cannot do any work right now, like preschool workers? Yes, you can, Paul. Can our Holston Credit Union make these loans? They are not currently an SBA approved lender. I actually put in a call to Adam, the president, this morning. He has yet to return that call, at least as of when I hopped on this. So they could. Now, I don't know. I'm not on their board, and I don't know their liquidity situation enough to know if they will. I actually was going to talk to him about that before this webinar. That was my hope, but it didn't happen. So we'll have to reach out to him and ask. Don't know, but if short answer is you should probably make these loans through wherever your church already has a banking relationship. That's my first recommendation. Might have been different if I'd had a chance to talk to Adam, but I haven't. I spoke with our banker this morning. He said they are not accepting nonprofits at this point. Is this just them, or is there a date for nonprofits? This is that he hasn't seen the new guidance that came out last night. That's what that is. By the way, I included that guidance in your handout in case you need to use that and forward that to your bank or your lender. So I normally wouldn't do that, but because this just came out last night and I knew lenders were not going to know what they were doing with it yet, I actually included the guidance for the lenders in your handout. So you have that and can provide that to them if necessary. If we've closed our Parents Day Out program due to stay-at-home orders but are continuing to pay the teachers, will that qualify for PPP forgiveness? Yes. May also qualify for some FFCRA help beginning April 1. So look into those provisions as well for anyone who would qualify there, which would be most everybody. Do the provisions for paid sick leave, family leave, and unemployment apply for our churches in areas that aren't legally mandated to close, but are observing the bishop's order to be closed? So the bishop's order to close in and of itself does not qualify. However, I happen to know this pastor since she's my wife. She is in the state of Virginia, and we do have a mandate that you cannot hold gatherings more than 10 persons. Your churches are both more than 10 persons, and so you have a governmental mandate to close and not hold those meetings. So the answer to that is, in your case and anyone else in Virginia, if you have more than 10 people, you're going to qualify. How do you define origination date versus when you get the funds? They are pretty much the same thing, Patty. Should we move 1099 to employee status now? You should move 1099s to employee status as soon as possible, but you need to be aware that there are other implications. So make sure you're involving your finance committee, your SPR or PPR committee if you are United Methodist in that process, because they became employees. They are now under PPR or SPR. So this is a discussion that should take place. But yes, you should definitely move towards doing that. You're going to need job descriptions, all that kind of stuff. Pastor salary can be included in PPP. Yes, Jenny, it can and it should. How does housing allowance get calculated into the pastor's salary for the purposes of PPP? So, Sam, the bottom line is if the church is paying it, then it gets included. So even if it may not show up on a W-2, for example, the church is paying it, right? So you're going to include it. And so what I'm really talking about is the amounts that the church is paying. And some of our churches are paying cash housing allowance, but all of our churches have a housing allowance resolution, which would reduce the amount that shows on the W-2 from what we are actually paying out in cash. And what we are actually paying out in cash is the amount that should be reported. So I hope I answered that question, Sam. If not, ask a clarifying question. Does the calculation include the employer portion of payroll? This depends on which part you're talking about. If you're talking about the PPP, it does not include federal, but would include state. So that's the answer there. What about housing allowance travel? I just answered that. Travel would not be included, but housing allowance would, in my opinion. Please confirm that I heard correctly. Regular employees, janitors, choir director, lawn service should be W-2 employees. Yes, they should. That is correct. Can we include our payroll processing fees? Great question, Chris. And I'm not sure that I know the answer. Reach out to me by email, and I will look that up for you and see if I can find the answer. I don't remember reading that, but I don't want to answer you without double checking that. So reach out to me by email and ask that question. I'll look it up for you. Should a separate bank account be created for the PPP as previously discussed with the other options? Yes, 100%. What I said there in the beginning is for any of these loans that have a forgiveness thing, which would be, or have a requirement that you spend them in a certain way, then I am suggesting the separate bank account. That is correct. Do we need to supply 1099s if this will not be an eligible expense? Or why do we need to supply 1099s if this will not be an eligible expense? Yeah, so you don't, Patty, is the short answer. That part is actually for those who are, those are not for churches. That's the short answer. Can you add the utility cost with the payroll amount, or are you only allowed to ask for the payroll amount, but you could pay utilities from that amount? Correct. So when you're figuring the payroll amount, you're allowed to ask for 250%. Let me rephrase that. You're going to take your, you're going to get 250% of your average monthly payroll, right? Which is going to cover, in theory, more than 8 weeks of payroll. So that extra 2 weeks that is in there is going to, or that extra 50% is going to cover the utilities and some of the other things, and that's what you pay that out of. So I hope that answered your question, Nathan. What if you're switching ministers during this time frame? Does that count as keeping the employee? Yes, because you're keeping the position. Yeah, I won't comment any further on that at the moment because I'm not authorized to. Sarah, if you take the loan and then don't need the full amount, can you return it with no penalties? So if you take the loan and don't need the full amount, can you return it with no penalties? Yes, there is no prepayment penalty, but you would pay interest on the amount of time that you had it, right? So I hope that answers your question. The number of employees, a straight count or a full-time equivalency, markets full-time equivalency based on 30 hours? Good question. Is the PPP loan, would that be less than 10,000? Should you just get the grant and not apply for the PPP? That would be my recommendation. Less paperwork. I like it, Monty. Michael Vaughn. So if payroll plus utilities for 2 months is less than the EIDL grant of 10,000, the church is, yep, same answer. Although another strategy would possibly be to take the EIDL. Yeah, basically I'm going to answer that. Yeah, just go with the EIDL. That's the short answer, assuming that's going to get you enough liquidity. If not, then you're going to combine the EIDL grant with the disaster loan. Are parsonage utilities able to be used in the initial calculation of the average monthly payroll? No, unless the church is paying them. So that depends. Some of our churches pay them and some do not. If the churches pay them, they are considered a part of compensation and are added to the W-2s, and they would count as compensation. If the church is not paying it, if the local pastor is paying it, then it's not going to count. So I hope that helped to answer that question. On PPP, if our employees were already furloughed prior to April 1, can we apply for PPP to bring them back in? Absolutely, you can. Where can we get the application for the PPP? I included it in your materials. So it is in the big handouts. That has bookmarks, by the way. So if you open that up in Adobe or something, look at the bookmarks. That is in there. And I'm going to go over that PPP application in just a minute. As a pastor, I am paid by the month. Do I prorate my salary in order to calculate the 8 weeks of how the money is spent, or do I just consider it for 2 months? Yeah, so it's actually easy, Randy. You're going to take the total average monthly payroll, right? And then you're going to multiply that by 250% to figure out what your maximum amount that you're eligible to take out is for the PPP. And then you're going to spend that amount over an 8-week period, which should include 2 months out of that, right? So hope that answers your question. So yeah, you're just going to look at showing the total amount. Does workers' comp payment count towards the average monthly payroll amount? The answer to that is, let me think about that actually. I'm not sure. I would have to look that up. So Randy, email me on that. I'm not sure. That's a good question. I'm not sure. Email me on that. I want to look it up before I answer. The PPP application asks the applicant to certify that to the extent feasible, I will purchase only American-made equipment and products. Can you shed light on this? Yes, that is true. It does. But that is purchasing with those funds. And for most of us, we're not going to spend PPP funds on purchasing much of anything, because we're going to spend it on payroll, and we're going to spend it on rent, and we're going to spend it on utilities, right? And mortgage interest. Those are the things that we're going to spend our PPP money on. So it's a little bit irrelevant, but that's a standard SBA thing. Will PPP funds be subject to the conference and district tithe? Fantastic question, Bill. And my answer to that, so this is Knox's opinion. CFA has not discussed this. But my answer to that is technically yes, because it is income that's coming into the church for your general operating expenses. So technically the answer to that, I think, would be yes. I would tell you unofficially, and I know that I am on CFA, but I'm not speaking for CFA at the moment. So understand that. Unofficially, we want you to be liquid in your local church. And so we want you to do what you have to do at the local church level during this period of time. Now, our hope is that in getting some of these funds, you are able to fully meet your obligations, because rest assured, the conference has every bit of the same problems you have and maybe exacerbated beyond, right? So the conference and the district still need that money. We still have every bit of expenses, just like the local church. And you better believe that our income is dropping just like yours is, because we're on a tithe system where it's 10% of what you bring in. So our hope, and again, I'm speaking for me personally, my hope would be that in doing all of these things, providing some of this help, you are able to meet your obligations. But I'm speaking for me personally and not for CFA. We have not discussed it. Church Bookkeeper says, we are a Georgia nonprofit corporation. Yes, you would qualify as a 501c3. Yes, that would qualify. If you can get the PPP loan, can you still defer the payroll taxes? Good question. And the answer to that is yes, but you would not be eligible for the credit that we talked about, the employee retention credit. You have to pick one or the other on those. Does the number of jobs refer to the current 2020 or the end of 2019 that was used to calculate the monthly average payroll? It's going to be 2019 for most lenders, but some lenders may do this differently, and they may vary a little bit. Some lenders are going to want to look at your first quarter. It's going to really depend on the date that the lender chooses. It has to be a 12-month period. So I would plan on it being 2019, but I would also have your first quarter of 2020 ready to go in case your lender wants that included. Yes, we are recording today. Someone asked if we're recording. So yes, it is being recorded. Is it best to put the PPP funds in its own fund and track it separately? Yes, that is the best thing to do. That's the short answer. Will the recording of this presentation be made available? Yes, you will tonight get sent a link to the recording. Lost connection. Did I answer? Where did he go? I lost that question. I'll have to come back to it. We have a secretary who asked to have her hours greatly reduced. Are we legally allowed to do that? It's a great question, Jason. Part of that is, let me back up. You need to ask an employment attorney. That's the short answer. I should not even answer that question, even though I have an opinion. You should ask an employment attorney because I am not authorized to practice employment law. What happens if I did not receive a refund? Okay, we answered that one. If I did not receive a refund in 2018 or 19, if you paid by ACH, then they're going to have your information. If you paid by check, they are not. So that's the short answer. Can custodians apply for unemployment if they are not being paid? The answer to that is yes. All right, I'm going to go ahead and throw up a polling question here, just basically asking whether or not this webinar has been helpful. I'm going to continue to answer some Q&A, and then I am going to come back and walk through the application. I know I have run over time a little bit, so if you need to leave, it's okay. But we have a ton of questions today, which is actually a good thing. And I want to make sure that I answer as many of these as possible. So here's what I'm going to do. I'm going to answer one more question, then do the application, and then I'll come back to questions again. And I am willing to stay as long as we need to answer every question you have, but don't feel like everybody has to stay. If you want to, you're perfectly welcome to stay, but I don't want everyone to feel like they have to either. All right, so we are going to go ahead and, yes, Tim Jones actually just asked me to remind all of our pastors to email Sue Weber, and she will issue you 0.2 CEU credits for attending today. And Tim, I will actually also send her the list of who attended, and so I'll help with that as well to confirm that for her. But yeah, email Sue Weber, and she will get you the CEU credits for today. So thank you, Tim. All right, last question I'm going to take before we go to the application. If we are paying our employees their full salary and or the giving remains about the same, should we apply for any of these? Great question. So if your giving has remained the same and you do not anticipate it decreasing and you don't have any problems, then that is an ethical question that you can ask yourself. I would personally definitely avail myself of the employee retention credit. It's free money. It's intended to be there. It's a tax credit. And I would definitely avail myself of that one. The others, that's an ethical question you'll need to ask amongst yourselves. But I would definitely take the employee retention credit in that scenario, is what I would do. Where again do parents stay out program teachers who have no kids to teach fall? They could potentially fall under the sick leave, potentially, if there is a stay-at-home order for the 2 weeks. And then they would, beyond that, you can keep them on and through, getting those funds through PPP or EIDL or something like that. Or if you laid them off prior to April 1, they could go apply for unemployment. All right. How do we get the employee retention credit? So that's a good question. You actually are going to get that credit on the 941, or actually you can do it on the 72. So that handout that I sent you, you can get it on that 7200. Let me actually, I'll throw that. Ooh, I don't have it loaded. Hang on just a second. I will throw that on the screen and let everybody see it and walk you through kind of what that looks like and how you do it. All right, so you should see on your screen, first of all, notice that this is a draft, do not file. But what you will notice is this is Form 7200. And if you look at Part 2, Line 1, total employee retention credit for the quarter. So you're going to be able to claim it there. You also would be able to claim it on the 941, so which is your quarterly employment, your payroll tax form. So you're going to be able to claim it right here on that Part 2, Question 1, or on the other. So great question. Fantastic question. All right. What I'm going to do now is actually share the application for the PPP. And so your screen will switch to that shortly, I hope. All right. Hopefully everyone is beginning to see that. Now, there's a couple of things that we need to talk through because they're not necessarily intuitive. So what should be intuitive is you are going to check the box that says 501c3 nonprofit. Make sure you check that box. You're going to put the business legal name. So that's the same name that shows up on your GCFA group ruling letter. Make sure it is the same. You're going to put your business address, assuming you're United Methodist, as I said that. You're going to put the EIN. You're going to put the phone. You're going to put the primary contact person who can be contacted and an email. Then you're going to put the average monthly payroll. We talked about how to calculate that. You're going to multiply that by 2.5. And then you're going to add to that if you took any EIDL loan already. And then you're going to write the number of full-time equivalent employees. This should be an FTE, a full-time equivalent employees box. Then you're going to check the purpose of the loan. So you're all going to check payroll. And by the way, you must spend at least 75% of the loan proceeds on payroll in order to get any forgiven. You're all going to check utilities. And some of you are going to check lease or mortgage interest. I say some of you because I happen to be serving a church where we don't have a mortgage and we don't have a lease. So neither of those is going to apply for us. None of you are going to check other because you want this to be forgiven. None of you own the church. However, the Bank Secrecy Act does require that the bank collect the Social Security number and driver's license or some other government-issued photo ID for the person who is responsible for making the application. So you're going to ask your bank what they want here. Some of them are going to say leave it blank, and they're just going to collect that information separately. And some of them are going to want you to put the church officer's name who's filling it out, the name and ownership %0. But leave it blank until you talk to your bank about what they want there, okay? Because the banks are going to vary on that. Then we're going to answer these questions. That part is straightforward. And then the person filling this out is going to initial each of these certifications on behalf of the church. None of these is super scary. The one that I do want to point out is the one that says Current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So going back to the person that asked a minute ago, if we don't really need this, should we take it? The answer to that is no, not for the PPP, because you would have to certify that statement. But you should take the employee retention credit, in my opinion, in that scenario. All right. The next 2 pages are simply how we answer things. But down here, you're going to sign as the authorized representative. You're going to print your name. You're going to print your title, church treasurer, trustee, whatever the case may be, church council chair, whatever, whoever's making the application here, and the date. And then, like I said, the next 2 form pages are just some instructions. So it's not a complex application at all. I would fill this out before I went to my bank, other than this part, and I would have ready my documentation, and here's what I would have available. I put it on a slide already, but here's what I would have available. I'm going to have my evidence of how I calculated my average monthly payroll expense. Okay? I'm going to have that available. I'm going to have my evidence of my number of full-time equivalent employees. I'm going to have my group ruling letter, if I'm United Methodist, from GCFA. I'm going to have my P&L for 2019, and I'm going to have my current balance sheet, or technically in the nonprofit world, we call that a statement of financial position. Okay? I'm going to have all of those things available. That doesn't mean I'm going to provide them all. But when I go to the bank, I'm going to have them available in a folder so that as I get asked for things, I have them. Okay? I'm also, if you have it available, going to have something that shows my EIN on it. So it could be, I'm also going to have my 941s. I forgot to mention that. Make sure you print your 941s for 2019 as well as first quarter of 2020. And that will show your EIN directly on that. All right. I hope that that is helpful. We're going to go back to some Q&A here. Looks like I still have a lot of questions. All right, so I answered Melody. Who do we list as owner? I just answered that. Do you have to get a loan if you get a grant? Good question. The answer to that is no. You can always turn down the loan. So good question, Shirley. Can I include the church portion of health insurance payments and total payroll expenses for an employee making over $100,000? The answer to that is yes. Is there any reason to apply for any of this if we can continue to pay our pastor? He's our only employee other than people to clean and mow that are independent contractors. So, Susan, the answer to that is yes. If you're not receiving the full amount that you would have pre this experience, and so your income is less, you have other expenses beyond pastor, right? So, for example, in my church, we're not in danger of not being able to pay our staff, but we are in danger of greatly reducing our reserves and running through our reserves in a very fast way if we do not fix some things, right? Because we're not open, so we're not receiving that regular offering. Now, we're actively doing some things to receive that offering. We're doing the online giving, and we're inviting people to mail into our P.O. box and depositing those. So we're doing some things actively, but what we don't know is how long this is going to go on. So depending on the time frame, we could eventually be in trouble because our income is not what it was pre this experience. And if you can answer the question that your income is not what it was pre this experience, and so you have been provided with economic uncertainty, then you can certainly take out the loan. So I hope that answers that question as well as I can. All of this seems to be geared to large churches, huge budgets, lots of employees. Trying to take this in for the small church is very overwhelming. Can I help to narrow this down for the smaller church? Sure, Vicki. So I don't know how small your church is, but let's pretend you have one employee who's the pastor. So in this scenario, I can take out the EIDL loan in most cases, right? I can take out that EIDL grant, rather, and get that $10,000, and that is going to help me to pay the pastor and do all that I need to do, and I don't have a lot of paperwork for that, and that's probably the best scenario. I can do that, and I'm going to get that money within a week or two. So that's going to really help me out. The other thing, Vicki, that I would really focus on is increasing your revenue. And what I mean by that is providing options for online giving, which CFA, the annual conference, has provided free of charge to all of our churches. And also the ability for them to mail in payments. So figure out where that is. Is that to a church P.O. box, a church address? Is that directly to the financial secretary's house? Because there's a stay-at-home order. What's the best way to do that? But, extraordinary times call for extraordinary things. And bottom line is we need to make sure that we can collect our money, our givings, so that we can continue the missions and ministries and the operations of the local church. So I hope that helps, Vicki. If you have a clarifying question or want to ask any more, certainly do. Amy asked, are we recording this so we can watch it again? Yes, everyone will get invited to the recording. Do I recommend a separate bank account for the PPP funds? Yes, I do. How might a 2-point charge go through this application? Would each church have to apply separately, or could they apply jointly? Great question. Some of that depends on how you're paying. So if each church is paying separately, has a separate payroll, then you're going to apply separately. If the charge is the only one paying, then you're going to apply independently as the charge using the EIN of whoever is issuing the W-2s, which is usually the larger church in that scenario. So it all has to do with who's doing the payroll. Mary said, Ari, my previous question looks like the employer is listed as Holston Conference and the conference EIN is on the W-2s. So the answer is you would not qualify, but touch base with Rick, Mary, because he's going to be doing some of this at the conference level, or we're going to be doing some of this. Rick is leading that effort at the conference level. So reach out to Rick about what options might be there. A lawn service, Sue Lynn, is going to be a 1099. In most cases, this is not an individual who only does it for your church. This is a lawn service that does it for other businesses and locations as well. That's a 1099. What is included in utilities? For example, telephone and internet. Yes, both of those are. FTE is based on 30, not 40 hours. That is correct for SBA purposes. Please clarify once again, EIDL loan 10,000 best or 10,000 PPP grant. If you only need 10,000, I would do the EIDL grant because it's less paperwork and it's going to come quicker. You can always come back and do the PPP afterwards if you need to. Just remember it won't be forgiven at that point, but then it'll only be at 1%. So that's still going to be better than the 2.75 on the other side. Clarify the statement that if applying for a grant, you are simultaneously applying for a loan. Yeah, so when you apply for the disaster grant, you are simultaneously applying for the emergency or the economic injury disaster loan with the SBA. So they will be reaching out to you about that. Are we going to be able to see these Q&As? I talk swiftly. No, you are not. I do talk swiftly. I have to. There's a lot of questions here. Lots of people today that had questions. Our Mother's Day Out program is open 2 days per week. Would the workers qualify for PPP due to part-time, about 14 hours a week? The answer to that is yes. What is the implication for forgiveness of PPP if we have to lay off an employee once PPP runs out? No implication for PPP, although I would make sure I did that after the forgiveness went in. But what they would hope that you would do in that scenario is think about an EIDL loan to give you the liquidity to not have to lay off that employee. So that's the long and short answer there. Is it a matter of choosing between paid sick leave or PPP? Can we have one employee on leave and keep the rest on payroll through PPP? So yeah, it's not a matter of choosing. If they qualify for the sick leave, then you have to pay the sick leave. That's the bottom line. And you can have one employee on leave and keep everyone else on payroll through PPP. Yes. So hope that answers that question, Paul. What is the implication of forgiveness of PPP if all of the loan is not spent in the 8 weeks, especially payroll is the only eligible expense? So you probably have some utilities, I'm guessing, Courtney, but yeah, so if it's not, then you just, you pay it back. There's no prepayment penalty, and you're going to have 1% interest due on whatever you didn't get forgiven. So whatever percentage, whatever portion would not be forgiven would be subject to 1% interest for the period of time you had it, but there's no prepayment penalty, so you just pay it right back. What type of utilities will be eligible? Power and gas only? No, all utilities would be eligible. Kind of answered that earlier. Telephone, internet. If you happen to have cable at the church, I'd include that too. Most churches don't. Brad, for United Methodist pastors, would we use line 11 of the PSW, which includes reimbursables in our reported income? No, you would not. Reimbursables under an accountable reimbursement policy would not qualify for inclusion in the PPP. So I hope that answers the question. When we pay employees with PPP funds, do we make the usual tax deductions from the checks, or are the payments included on their W-2s as income? Yes, the payments are income to the employees. Yes. And they also, it's irrelevant for a church, right? Because we don't pay income tax, but they would be fully deductible if we were a regular company. So, but yes, they're still included on the W-2s. They're still fully taxable to the employee. With phones, internet, yeah. Lots of people are asking that same question. We have a preschool. They're under our EIN. Do we include them in our PPP? Yes. If you're doing the payroll under your EIN, they get included with you. If my parents' stay-out employees would not have been paid during the summer, would we continue paying them if we applied to use these loans? I would continue to pay them under the PPP. I would probably continue to pay them until the PPP runs out. I would not pay them because that's going to be forgivable. So why not help them out, right? But I would not pay them under the EIDL that I'm paying 2.75% interest on. So I hope that answers your question. Over how long a period and what period is the average payroll figure calculated? So, David, we're going to take 2019, the calendar year, and we're going to look at what is our average monthly payroll expense. And again, what calculates into that, I covered on one of the slides, so look back in your material. Preschool teachers' salary are reimbursed by parent fees. Can their salary be included in calculating the monthly average pay for the PPP? Yes, I think. But let me make sure I understand that. So, yeah, you get parent fees, but the parents are not paying the preschool teachers directly. The teachers are paid by the church, I'm assuming. If I've made that correct assumption, then the answer is yes, their salary is included. All right. Is this form in our handouts? Not sure which form you're referring to, Amy. But if you're referring to the borrower's application, yes. If you're referring to Form 7200, it's not in the big handout file, but it should be available under the Handouts tab now because I uploaded it for you. None of our employees are full-time. Would we qualify for any loans? Yes. You could still get that EIDL grant. Mm-hmm. Can you clarify where the group ruling letter is? I went to the website that you indicated, but don't see anything but the application for it. Fill out the application, and then they'll send it to you. Well, actually, they do it pretty quickly. But yeah, fill out the application. How are full-time equivalents calculated? I covered that, but basically 30 hours. If our nonprofit organization has to lay off employees prior to April 1, is there a requirement to hire any back in order to get loan forgiveness for PPP? Yes, would be the short answer. Sort of. So you have to make sure that you have at least 75% of your payroll from your average monthly payroll for 2019. So that should answer your question in and of itself. But the goal is to bring them back. To email you, do we just reply to the email that confirmed our registration? Yes, you can do that, Chris, and that will get to me. Can I create an Excel spreadsheet of payroll expenses to be used as evidence of payroll expense? Yes, Sarah, you can, but you're also going to need bank statements or something to show that you didn't just make it up. Tom says, since we know that the 348 will go quickly, time is of the essence. We're intending to submit the application today. If Church Council doesn't approve in a few days, we will refuse any proceeds. If we're approved, want to get it in the pipeline now. Thoughts? I'm fine with waiting till Monday. Personally, I don't think that's going to be a problem. Most banks are not even taking these today. So I'm really confident the funds are not going to run out today. What I'm doing, Tom, my church council is meeting by conference call on Sunday night. And we will approve this, and then we will make this application on Monday. So for whatever that's worth, that's what I'm doing. What you do, obviously, is up to you. Will you send out the info for the Monday seminar? It's the same. I'll put it down here. No, I can't actually because I don't have it in front of me. It's the exact same URL to register for Monday that it is for today. So the registration page is the same, and you can do that. And I think Tim, if you're a part of this conference, sent that out on both Monday and Wednesday. So you can look back to your emails from Tim Jones, and you should be able to find that in there. If you're unable to find it, then email me and I can send you the link back. I just don't remember it off the top of my head. All right. A couple of you saying thanks. Utilities, website, answering service for a business. Now, answering service is not going to be a utility. Website is not going to be a utility. No. Lawn service should be a W-2. Now, I just think it's a 1099. If the lawn service is a professional lawn service, this is a company, that's a 1099. The only reason it's a W-2 is because you have someone, church member, someone who is coming in, mowing your lawn, doesn't mow any other lawns, just mows your lawn, and they use your equipment. That's a W-2. A lawn service that comes in, brings in their own equipment, does lawns all over the community, that is a 1099. Hope that clarified that. Okay. 2 or 3 questions on that. Church insurance, includable as a part of utilities. No, that is not a utility. Paid per event employee. So they're going to factor into that average monthly expense for payroll, right? And then I guess you're going to figure out, you're going to make sure that you're above 75% that you're paying in payroll. So, you're going to figure out whether they would have been impacted, whether you would have had events that they would have been impacted by. Who determines if a PPP loan is forgiven or not? Is it the bank or the federal government? It is the bank, and there are guidelines for that. I actually provided those guidelines for you in your packet. Where can the PPP application be found in for printing? It is, if you pull out the bookmarks, it is in there. And I don't have that open at the moment. I guess I could open it. Let me go open it, and I will tell you exactly what page it is. Give me just a moment to open it. So I put the application on page 98 of your material. And it is called, if you open the bookmarks, Paycheck Protection Program Application. All right. Are part-time salaries included in the average monthly payroll? Yes, they are. What about alarm protection utility? I'd probably do it. Thought of one more utility, virtual office, a place where the mail goes. No, I would not include that as a utility. Property taxes are not a utility and are not included. Would lease cost for a copy machine be considered a utility? No, that's not going to count in this. All right. Wow. We actually got through all of the questions there. All right. I have not read all of this chat, so forgive me for that. But I told you I wouldn't because I can only focus on one place. Perfect. Tim Jones says he just sent an email out with all of the info for Monday's webinar. And he also gave me the link. Thank you for looking that up for me, Tim. So I will put that down here in the chat. And if you have other people from your churches that want to show up for Monday, then there is the registration page for that. So with that, we're going to say thank you so much. Appreciate you hanging out. I know that we went over here, but I think it was valuable to answer all of our questions. Someone said the PPP application form is different than what is on the screen. You know what? You're right. And I'm glad you pointed that out. The SBA updated this application this morning, 30 minutes before I went live. And I downloaded it and changed it on what I was going to show, but forgot to change it in the handout. So accept my apology for that. And I will email that application out to everyone who attended today. It may be tonight before I get to that, though. If you want to search for it, you can search for it. Let me find the URL where you can download it yourself. SBA. And I'll put that in the chat for you. Or actually, what would make more sense is to just put it in the handout tab, wouldn't it? Let me do that. Give me just a moment. Sorry, this has been a bit of a moving target. Like I said, they actually released a new application form literally this morning. All right, I have just shared that into the handouts tab. So if you look in the handouts tab, you should now see PPP borrower application. And I have not even had time to look and see what changed. Probably not much. All right, someone said we're in a 2-point charge. Each church pays into a central account for the pastor pay, but separately for individual church employees. Can we still apply for the grant as individual churches? Yes, I would apply as individual churches and each include the portion of the pastor that you pay. That is what I would do. All right, we are going to go ahead and end today. I want to thank you all for being here. Glad that you showed up. In my opinion, this is very, very important for our churches. We want to make sure that our churches have the information and the material that they need in order to be okay, because we are in challenging times. I'm going to close with a word of prayer, and if you will join me in that, I appreciate it. God, we just thank you. We thank you for the opportunity to be in ministry as clergy and as laity and as leaders in our churches. We thank you for the ministry of your church universal. And we thank you for the ways in which your church is ministering, even in spite of this current pandemic. God, we just pray that you be with our leaders and with each of our members and with our communities. Pour out your Spirit, God, that they may feel you, that they may know you, that they may have a sense of peace, and that they may know that you are there. It's in Jesus' name we pray. Amen.